Top of the morning, traders, and happy Wednesday, January 14th. And welcome to the Most Value Pack Live Trading Show, where we live trade, break down charts, cover high-impact events, and talk trader mindset. Hopefully, everyone had a great day yesterday and is ready to kick off another opportunity-filled day. First things first, we did get PPI data this morning. We did get retail sales data this morning, and we are looking to gap down to open things up. We also have the Supreme Court decision at 10 a.m. as well. So that's another catalyst. So now we're officially sandwiched between those two catalysts. And we're officially open. Let the market digest the data. In the chat on YouTube, let us know where you're joining us from. Let us know how many trades you're looking to take. Review your rules. Stick to your rules. And always keep risk management at the top of your mind. We're officially open. We're going to gap down to open things up. Good morning. Let's get the likes up on YouTube. 50 likes. We're going to do the giveaway. We can easily get 50 likes within an hour. Okay, we can easily get 50 likes within an hour. And I'm ready to give those things away. If you're interested in joining our community for our pre-market prep stream, access all the resources. Link is pinned in the description. Use the code TRIAL30 to join. All right. So this is just one portion of what we do. Our stream does start at 9 a.m. Eastern. You get a game plan. You get the levels. You get the zone. You get everything you need to put yourself in position to win. All right. That's all we can do. Put ourselves in position to win. So let's first things first. We're going to mark out that daily open with that BOGTOG 50% retrace. We're opening up slightly below that daily downside breaker, slightly below prior day's lows. Again, let the market digest the data. So the only ones on the clock currently, are my 5-minute orb army. 5-minute orb army, you're on the clock, of course. If you do decide to trade, you are on the clock. All right, so I was seeing a nice little rejection there. The Q's falling off a cliff here. Q's below pre-market low. SPY's headed to pre-market low. 690.23 is pre-market low. 693.23 is pre-market low. And we're below that weekly open. So we essentially, the gains from this week essentially have been evaporated. They evaporated. We came back, retested that key level, daily downside break, a rejection right off the open. So pre-market low or below pre-market low on the Q's and SPY. Q's and SPY are below pre-market low to kick things off. Again, the only ones on the clock currently, guys, are the orb army, 5-minute orb army. Unless you take bounce to rejection off those levels solely, let the market digest the data. Right off the open, everything is selling off. The only green spots, bright spots in the market as far as the sectors are concerned, XLV, XLP, XLE. Everything else is red. Okay, during the first 2 minutes of the market open. Let's mark out that daily open as well. 691 even is that daily open. That gives us a nice little zone. 691 even. Okay. Good. And do me a favor and put in the chat what you're looking to trade. How many trades, what you're looking to trade. Believe it or not, by doing that, it will further solidify your plan. NYDO. Okay. Further solidify your plan. We're getting a nice little bid off 690. We discussed that 690 in pre-market program. The Qs are below PML. The Dow wicked above PMH. So they're all kind of doing their own thing. All right. See if we get that legitimate bounce off that 690 to lead us back above pre-market low to reclaim VWAP 690.88. Right. When things start getting clean, guys, things start getting clean with that runway. This is the area that we want to reclaim. If you're playing reclaims, this is your time to shine, right? This is your time to shine, right? If you're playing a reclaim back the upside, right? It has to get past this point, right? It has to get past this point to get to this key zone up there, right? So on the other side of 691.65, there can be where the opportunity lies. On the 5-minute, we're looking to go hammer here. 58 seconds left. Wow, the Q's shot out of a cannon. Okay, IV slightly elevated here. See if you get that break above that level. Continue push as the Q's are getting shot out of a cannon. Okay, the 5-minute orb 691. in the next 20 seconds. I want to close above this territory here. Get that close above that territory. I'm looking to take it to the upside. VWAP can be risk. That's about 60 cents, a little wide. Let's see if we get that close. Okay. See if we get that continued push. 5-minute orb army on the clock. See if we get that nice break. If we get that break, I'll be there for it. VIX is dumping. I'll take it right there. Take the calls right there. My risk will be break below these lows. Down 6, down 7, down 8. If we get stopped out, close back below it, I'll get stopped out. Might have just got in front of that too quickly. Okay, fine line in the sand, 691. 691, that daily open will be that fine line. Average fill 161, down 6. This will be the no close. Could have maybe just exercised a little more patience. If we close below here, I'll get stopped out. Close below that, get stopped out. Down 10. Right, yeah, I ideally want to wait for that break and hold. So this is my fine line in the sand. Okay, I'll cut it right there for 14. Okay, stop down minus 14 here. Stop down first trade minus 14. If we can get back above it, I'll be there for it. I'll try to be a little more patient. Try to be a little more patient and try to see if I can take it one more time. If it can just hold above that daily open, reestablish itself, and go. Since this is a key zone, I don't want to hold it longer than I need to. Right, knowing that we can reject off of it aggressively. So I'll respect the fact that it was a little early, a little kind of just front running the position. And if it gets invalidated, I'll be out. Now we're trading below that VWAP. Trading below that VWAP. Let me do this real quick. Okay, nice rejection there. So now the Qs are falling off a cliff. VIX is starting to catch nice little bounce there. Nice little bounce there. So in this case, what I was looking for is a continued push, continued acceleration. Fine line in the sand being that daily open. Fine line in the sand being that daily open. We did fall back below VWAP. We did fall back below VWAP. And now we're back at that weekly open. Back at that weekly open. We can see a lot of back and forth in this territory. Good morning everyone on YouTube. What is IV? IV's implied volatility. How crazy the trading is in a given range. What are your targets on SPY? I have downside targets, upside targets, downside target off this rejection, 690. We do have our key zone all the way down there waiting for us as well. So I'll let the dust settle between the zone here. A lot of traffic. 690, 690, 67. We have a 690 67, yes. 691, 691 35, 691 46, 691 60. A lot of bumper to bumper traffic here. Bumper to bumper traffic. I do see this support as well. They want to put pressure on that support, fueled off of that rejection off that key zone. Off that key zone rejection. 2 to 3 trades today. IWM 15-minute or break. Or breakdown. 72% on another. 100% on the puts. Sancho's on absolute tear. I need 55. I need 5-minute candles before I get back in. Good. Right now we're just reading the middle of the 5-day, 20-day moving average. Good. All right, so not doing much. Thank you for becoming a member on YouTube. Cause and effect. Make sure to like the video on YouTube, guys. Let's get the likes up. Subscribe if you haven't already. Join our community. First trade out the gate. A little excited off the open, right? A little excited to see if I get that push to the upside. Even with that excitement, still have to manage risk. I know sometimes you can get excited, but if the trade gets invalidated, got to close it out. Okay? So we're back below VWAP. We're seeing back and forth amongst the indexes. Back and forth moves. Bitcoin continues to go. On the hourly, we're still 19 minutes left on this hourly candle. This is the top of the hour candle. Okay, 10 o'clock, we have the Supreme Court decision. We'll probably fire up CNBC in the background just in case if there's any announcements that do come up. And we'll continue to wait. All right, we'll continue to wait. As far as game plan is concerned, we're kind of in the middle. In the middle, we did bounce off that 690, drop into this territory. Would be wonderful. So we'll continue to wait here. We'll continue to wait. So right now we're at that weekly open. If we take a look at it from the perspective from yesterday, we were referring to a specific channel being formed and how it's tightening. And most of the time when that channel tightens, what happens? It breaks down. So it tightens, it breaks down. Once it broke down, it came back, retested with that last push during power hour and gap down. So now we're working our way all the way into the 667.83, 689.22. This is the key zone. That's where it lines up with. All right, so if we come with that territory, that'd be beautiful. The 5-minute orb to the downside is about to be triggered. 5-minute orb to the downside about to be triggered. 15-minute orb armor. You have 4 minutes left on the clock. Nice little breakdown. So typically with these key zones, you want to treat it as a UPO. Right, UPO meaning until proven otherwise, do trade it the way trade it with from the directional standpoint where it is. So what I mean by that is if it's coming into it and it doesn't break it decisively, it's resistance until proven otherwise. Right, so in this case, just waiting a couple of minutes on my end, right, to see if we can get proven otherwise, right, would have allowed me to know that, hey, that rejection is coming in. In this case, if you see that weakness there, has not been proven otherwise, that's your cue to go back to downside. So that's what, if you use this system, that's what it's going to boil down to. Your ability to make the reads at these key levels, at these key zones, these directional reads at those particular areas. The better you get at making those reads, right, the better you become. Everything else is between the ears. If you make the read wrong, if you make the wrong read off a key level, off of a key zone, you have to have that risk management in place. If you make the right read, okay, you will get compensated. Now we're trading below that 5-minute orb. As we continue to break down, the Qs fall off a cliff. We're below that pre-market low. Pre-market low is 690.23, 690.23. 690.23. So in my case, the best trade I made is cutting that trade. That's the best trade so far. Okay, the best trade was the cutting that trade. So PML is right here, 690.23. So we're trading below PML. We're trading below 690. Look at all these levels, guys. All these levels. So PML is giving us a nice little zone. Nice little zone there. We are creating separation away from it, and we do have another level waiting for us on that daily downside target. That next level is here. right there. Okay. That's 689.19. That's the runway. If you took the 5-minute orb, that breakdown took place. You're enjoying that position. All right. One hour bear flag. Okay, see if you can continue to come into that territory on the 5. 15 minutes. 15 minutes. Anyone have the puts? If you do, you are laughing to the bank. You are laughing to the bank. Nice drop there. 689.18. 689.18. Dead onside target. Beyond that, we have 689. 687.49. I believe I have that marked out as well. If you can't see, I'll highlight it. I will highlight it. What a drop. So again, I want to emphasize the importance of cutting that trade there, being wrong on my end. All right? Don't be wrong for long. If you do decide to be wrong, you're disregarding the fact that we have this breakdown, the fact that we're selling off here, and not look where we're bouncing. So this is your, between here and here, that's your space to operate. Between here and here, that's your space to operate. Right, now we're coming to that key level, that target, and we start bouncing. We're on the, we dipped right into that call zone, just the top end of it. We're still below that pre-market low. Still below that pre-market low here. Looks like a retrace reject potentially brewing there. Waves are waving to the downside. Waves are waving to the downside on the 1. On the 5, see if there's any detection of a hammer. The Dow starting to bounce off PML. IW came close to PML. Key level 695, that's 95 minus 23 cents, 14% per con. Okay, good trade there. All right, so in this case, if you took that last trade, right, risk management. This can go from 15 to 14%, all the way to 60, 40, 60%. 1 DTE, 677, 25% close. Beautiful, beautiful. We're coming up to the quarterly 20 MA moving average for the retest. What level is that, Hero? What's the exact level? I say VWAP touch at 7. At 7. 685.0 DTE. Put enter, looking at 686. But we'll see. Okay, off that nice little bounce. Out 687, small percentage. Okay. So far, what the reads we're getting is we are directional to the downside. We're trading below the daily downside breaker, so prior day's lows. We're trading below the yearly downside breaker. We're trading below that weekly 50% retrace. We're trading below that weekly open. All right, we're trading below a lot of levels. So can we get the energetic push off of these lows? Off of these lows. Okay, that came right to that bounce zone, right? Just came right to that bounce zone, and that bounce zone was right here. Can we get an energetic push off of these lows past PML? Very similar to yesterday. Past PML. Can we get that push? Can we get that push? So we're testing that key zone there. If you're looking for that dead cat bounce, if you use that first wave, if this candle closes to the downside, you can take it back to the downside. I want to see if it can close. If it can, see if I can take it back to the downside on the puts. If it gets that reclaim, that'd be the invalidation marker. So back below these lows. Okay, it's starting to go. See if you get that hold. See if you get that hold there. Just keep an eye on it. Okay, that kind of just looks like it's taking off without me there. So in this case, you want us to come into it. You want that bearish candle, and then you take the breakdown back below 689.90. We can come back and test that 689.90. Ah, that was nice. Just a couple seconds shy. Anyone catch that? That retrace reject, that was beautiful. That retrace reject, beautiful scalp there. Beautiful scalp. All right, this one you have to be patient for. But textbook retrace reject, all right? So retrace reject goes into the jaws of the sell block, comes back, has enough power to slide to the downside. This nice little candle there should give you anywhere from 8 to 12% if you're scalping. If you're looking for that complete breakdown back to the floor, back below 689.18 into 689.11, you can go to break even, see where it takes you. Move your stop to break even. All right. But it's a good thing to, it looks like after the CPI did yesterday, we saw a lot of erratic movements off the first couple minutes. Same thing today, we're getting a lot of those erratic moves. So what I mean by erratic moves is when you're in the position, you're going to get some pushback. So you can be directionally right. You can be directionally right, but there's some pushback, and you're forced to consider closing because it's coming close to your risk or violating your risk, even though you're directionally right. Right, that's what I mean by. So there you go. That was nice. If you caught that, congratulations. If you caught that, congratulations. If you didn't, don't chase it. Right, the ones who are going to get punished are the ones who chase. 11% 1DT 685. I wanted to wait for a 5-minute candle, but I saw that quick rejection on that second candle. Got in. Beautiful job, Sancho. All right, I wasn't able to get into it quick enough, so I'll continue to wait. I will continue to wait here. Keep in mind that 15-minute orb low is at 689.46. So we did break below it, got back above it. That ripple turned into a nice little trap. The VIX continues to head north. The Qs are looking to go bear flag on the 5. Keep a close eye on the Qs. That will help us. I want us to dip a little more into this key zone territory. That key zone, according to our game plan, dip into it a little more. We are testing that hour 200 EMA. So strikers, all right, don't lose sight. Okay, on the 15, we are testing that 200 EMA. We dipped into the just a little bit into that key zone. All right, so don't forget. This is a beautiful wave rejection as well. Beautiful wave rejection. Anyone else take that last one? 7 minutes till news. Manage your trade accordingly. 100%, guys. Thank you for the reminder as always, Hero. Supreme Court decision, 7 minutes. All right. Anything can happen. We can get a reaction. We can get no reaction. That's the tariffs. Let me pull up CNBC. All right. See if we can get anything on that end. Okay, we'll have a close eye, see if any breaking news headlines push, and we'll see what reacts first, okay? We'll see what reacts first. And if anyone does get the breaking news ahead of us, let us know in the chat, let us know on YouTube. We are a community, guys. Sharing is caring. All right, share. That nice little drop here, that gave us a nice push into about 60 cents, 59 cent push to the downside. $0.69. more we dip into these lows, the more interested. Okay, breaking news. What is it?
Guys, just getting some headlines here from one of the Fed voters this year. This is the president of the Philadelphia Fed, Anna Paulson, who is speaking in Philadelphia. Just want to pull up. She says modest adjustments to Fed funds rate likely appropriate later in the year.
Okay, that's not the breaking news you want to hear, but we're looking for the Supreme Court tariffs. Supreme Court and tariffs. See this nice little compression here. Might seem like we're overextended here, right? From my view, that bear flag is starting to break on the cues. So I'll welcome this overextension. Right, it's very difficult for me to engage in shorts here, right? Unless we get some sort of bounce and fade that bounce. So this is rewarding the ones who took it here. The closer we get to those lows, the more of a bull I become. The more we dip into this territory here, the more bullish I lean. I just need now that price action combination to support that line of thinking. But this was clean, guys. This was very clean. So that runways from here to here, right? That from here to here, that's that target. So second time in a row, we came into this 689, 689.20, which is that daily downside target, and we had a pretty significant response. Okay, nice little reaction, right? Nice little reaction there. Level 2, we're starting to pile up on the level 2. Sellers are starting to pile in. Let's see. Anyone use level 2? Anyone use level 2 in time and sale in conjunction with what they do? Anyone else use level 2 from time to time? Okay. IW. All right. Quietly making a move. IW quietly making a move. So what formation do we see? Flat support. Okay. Descending resistance. If the bulls can't get the break up out of that resistance, right, this support, there's a lot of weight on the support. And it just takes one more straw to break the camel's back. One more straw to break the camel's back. Let's get the likes up on YouTube, guys. Good morning. If you're just joining us, we are live trading SPY. We did take one trade so far. We took one trade for calls to see if we get a push above those highs. Quickly got invalidated, and then it got stopped out for 14%. Outside of that, there have been some clean moves to the downside. Did provide this idea here for the puts rejection here. A couple of folks did take advantage of that. But again, this is all for educational purposes. I have to continue to say that because trading does come with considerable risk. Okay, it does come with considerable risk. I just saw the flash on the screen about the Supreme Court, waiting for the Supreme Court hearing, a ruling, I should say. Okay. It's getting tight. Do we break down here? Is this the straw that breaks the camel's back and slides us into little dip into that buy zone? Into here. Waves are waving on the 1. Waves are waving on the 1. Waves are waving on the 1, the 5. Again, I continue to push the downside, the 15. Should be the 15 on the hourly. This should be the 15 here. We're directional below the orb. Oh, that was a good entry there, right? Minus 9% 0 DTE puts. Don't want to hold through news. Good. If 10 a.m. is another nothing burger, I'm going to slam my keyboard. Just made you wait on the sidelines, right? That's what I don't want. IV crush will destroy both sides. Descending wedge. I'm not familiar. If we get a rocket to 693, I will laugh. It's coming into my. It's very hard for me to shorten this territory. The more time it spends, the more time it spends in the call zone, right? So ideally, if I want to adopt a bearish line of thinking, I want to drop Retrace, reject. That's all I can really take. So it looks like Webull in Canada is lagging. Anyone else having issues with brokers? There's no issues on my end. Okay, there we go. There we go. Man, no, those puts right there. Those puts right there are really putting. Okay, are really putting. All right. But that's probably Supreme Court decision related. All right. More than likely, the Supreme Court decision related. So what is CNBC doing? Flashing ads. So you can see you're already behind if you follow the news. Okay, if you follow the chart, all right, if you follow the chart, you're going to be first in line. It's gonna impact the charts before anyone. By the time the headlines are written, okay, by the time the flash comes across the screen, by the time there's a graphic, right, the market already made that reaction to it. Okay, so that was a nice breakdown here. Okay, let's take a listen.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live as always from Post 9 of the New York Stock Exchange. We're beginning here with breaking news this hour as we await a potential Supreme Court decision on President Trump's tariffs, which could come this hour. Let's get right to our Eamon Jabbers in Washington with a look at what to expect as we await whether we'll get that decision today. Eamon.
Yeah, Sarah, we don't know whether we're going to get that decision. What we know is that the Supreme Court has said it has what they call 2 boxes of decisions this morning. So we are going to get some decisions from the Supreme Court. We just don't know which ones. They're expected at the top of the hour at 10 a.m., but this could trickle out over a couple of minutes as we see those decisions being issued by the Supreme Court. So we're going to watch and wait here. But at stake is the president's more.
Okay, so it looks like the Supreme Court decision probably hit the tape. Anyone have any news? Let me know. Let me check our breaking news feed. So we do have a free breaking news feed for everyone on YouTube. Make sure to join our free tier community, guys. Free tier community, absolutely value packed, no strings attached. Should be somewhere there. So maybe someone can update us, let us know. But nonetheless, we can see we did react there. If you caught those puts, congratulations. Gary, 42% for Gary. Green on SPY puts, beautiful, beautiful. It was just a couple seconds short of making that execution, but no excuse. But the main thing is the best trade that I made so far is closing the calls here. All right, closing the calls there. So again, importance of risk management. If I don't close those calls here, right? So now I'm completely ignoring. There's so much invalidation going on. Let's take a listen here.
October fourth quarter number expected up 0.1%, comes out up 0.3%, and last month also joins the up 0.3 club, a revision from up 0.2. So back-to-back 0.3 for November and October, and they're tied for the second highest builds on business inventories of 2025. The high was up 0.4 in January of 2025. Of course, the more widgets you make on the inventory side, the more you contribute to GDP. And GDP for the fourth quarter is already expected to be rather large. We also have existing home sales for December, and for that, we aim east to Diana Olick. Diana?
Well, Rick, existing home sales in December.
Okay, existing home sales just dropped as well. So new home sales yesterday, existing home sales today. Okay, we sold off pretty aggressively here. So again, let's see if we get a nice little hammer off of that key zone. Okay, that's what we're waiting for. Preferably on the 5, bleeding to the 15. Let's get caught up on YouTube. Last week's highs, home sales released. If we get a hammer on the bottom of that liquidity zone, I would buy the call. We're basically looking at the same thing mixing. So we're looking at the exact same thing, same line of thinking. So that'll be the trigger as well. If we create separation away from this, it flips the next zone upcoming. So if you are bearish, you're looking for a potential push back into that at least first wave. The only key level we have between us currently is all about that 689.18. So this pattern here, I was saying earlier, this pattern here, we review all these patterns in boot camp in detail. Not only how to draw it, but how to identify it and what it really means. What it really means, okay? You need to know what it means, not just how to draw it. All right? It's like knowing the alphabet. You can know the alphabet, right? You can know your alphabet from A to Z, But if you don't know how to put it together, you can't read. Just because you know your alphabet doesn't mean you know how to read. Okay, so very, very similar to that. So we see this pattern, okay? It depends where we're coming from. There's a continuation pattern. All right, based on where we're coming from. So now that nice little pop that we're seeing here, is that it currently leading to a nice little flag, or is this as low as we get? Okay, if we do hammer on the 5, that's going to be above this candle's highs. If we do hammer on the 5, it's going to be above this candle's highs. Okay, 688.67 territory, 688.67. We might make one more pop, one more drop, and then hammer. That'll be preferred. But that 688.67 is that hammer on the 5. Looking at the 689s. Okay, see if we get that hold. See if we get a nice little hold above that 688.67. Vixen start pulling back. I like how that 15 looks. As long as that support doesn't break, we can potentially use it as a path. And this is coming out of that key zone. 8 minutes left on that 15-minute candle. 8 minutes left. We're in the jaws of the waves, of course. We're going to have to be in the jaws of the waves if we're going to play a reversal. That's the nature of reversals. Okay, see if we can push into 689.18. 689.18. Hammer on a 5-minute candle, bread and butter, 100%. 100%. So I like how we're creating separation away from that level, right? Haven't got that close above it quite yet. We can just pull back a little bit, test it. I'll be there for it. Going back the upside. Okay, we're starting to wick below it. If no signs of life, we are rejecting off the waves. So if you're a bear, what you're looking for is you're looking for a rejection off the waves and this to crack, this support to crack. You want that support to crack. So we're starting to fade on that hammer. If we can reclaim 688.67, show some signs of life. If we can, if we break the support, that leads to breakdown back to downside, pursuing 687.49. Right, we're kind of jammed between two zones. That's why it's really hard for me to really make an entry. Right, I want to have an entry at least near the key level. If this hammer formed in this territory, if this a breakdown formed in this territory, that would be ideal. Or if this hammer was fueled off of here, that would be ideal. Kind of in the middle. So in this case, if you're looking to go long, closure above 688.67 will be the verification. But right now we're staring at a 2 down. 2 down means the candle was valid for a minute or so and is looking to get invalidated in the next minute and 36 seconds if we can't close back above that level. The 15 is still brewing. The 15-minute hammer is still brewing. Right, it's still on the table. 15-minute hammer is still on the table here. You can see the 5-minute hammer up here. We broke above it. Starting to fail. So can we use the support to continue to push? Okay, if we can regain 688.67, I could be there for it in preparation of that 689.18 test. See if we can push one more time to the upside. Starting to see the Qs try to bounce as well. Okay, I'll take it right there. Okay, I'll take it right there. In the calls, this breakdown will be my exit. If that breaks down, I'll be out of there. Breakdown of that, I'll be out of there. Kind of going against the grain here. See if that continue to push. Down 3, average fill 168. Okay, see if you like continue to push. Go, go, go. If you did take that, manage accordingly. Okay, now I want us to continue. I want us to continue to stack. I want us to continue to stack. I want us to continue to stack. If we can't, if this cracks, if this support cracks, right, that's the invalidation marker. Okay, see if you get that nice little push into 689.19. We are testing that resistance as well. We are testing that resistance as well. So I want no close below here. No close below these lows. So I want us to continue. Break above 680.92. Continue. Don't give back those gains. Use this support. We'll use this as a support. Kind of running out of room here. Not a lot of room. Not a lot of runway for us to capitalize on. At least to the upside. So if that support fails, then I got to get out. If that support fails, I got to get out. If it holds, if this zone holds, this is the NC. This is essentially the NC. That gray box. It's going to come down to that. So we want all these support tests to be held up. Okay, no close below there. That'd be a verification of a bear flag. So if you're looking for a bear flag, what you're looking for is a breakdown of that support. You're looking for the opposite. You're looking for the opposite. Okay, there we go. There we go. Up, wow, up 30. Take it off there. You guys saw that? I took it all off there. Anyone else take that? Sometimes you get lucky. All right, you have to be in position to get lucky. There you go. All right, that's probably related to Supreme Court. All right, so the reason why I took everything off is because of that particular reason. As soon as I got that pop, I took everything. Anyone else catch that? Maybe I could have held a runner, but usually when I get impulsive reaction like that, I take everything off. If you have a runner, just let the runner run. There you go, guys. Wow. Wow, wow, wow. All right, now we're in this territory there. So no surprise, you can see it's getting tight, getting tight, getting tight, downward compression, and we get a pop. Let's take a listen to CN.
And put into people's minds that perhaps the Fed isn't making policy appropriately, and that's a problem. I think that undermines the credibility of the institution, and it affects how easy it is to get back to price stability, because if people start questioning the motives of the Fed, then I think there's a problem.
Do you think that's what's happening? Because we haven't really seen any kind of big reaction in the bond market or the dollar, at least to this latest threat.
Right. Well, firstly, that can change because we know bond markets can react. But I think they're probably right in looking at what's happened so far. And the Fed has been very good about really pushing all those distractions aside and basing policy on the economics. And I think the bond market, especially seeing the reaction from various, legislators, central bankers, ex-Treasury secretaries.
Thank you for the update, Hero. So far, the Supreme Court doesn't rule on tariffs today. So if you're just joining us, all right, we put you in position right here. Okay? No risk, no reward. But main thing is, team, the main thing is more than that. More than that. I want you to go back and go to the game plan chart. And you will start realizing there's no such thing as coincidence. The days of coincidence are over. All right, if we go to the game plan chart from this morning, all right, and this game plan chart was sent out just like every day at 7:07 7:04, a little early. I've been waking up early past few days. Right, 7:04. Before PPI, before retail sales, before Supreme Court decision. All right, the mandate was 687.83, 689.22 bounce zone. We reiterated that. We reiterated that on the pre-market plan, and came to fruition now. Okay, so this is not something. This is not something random. It's not just, oh, let me just take puts or calls there. Ideally, what I was looking for is maybe one more drop, right? One more drop possibly, and then taking it. But the fact that we're starting to push here, 5-minute combination, gives us that confidence. So let me show you that key zone one more time. So you tell me, guys. You tell me what we see here. All right. So this is part of the game plan. We're not making it up on the fly. We're not building our airplane in the air. All right, we're building on our airplane. We're building our plane on the ground. Okay, flying it in the air. So this is the zone on high watch today. 689.87, 689.22. We go 2 down, 2 up. All right, and guess what? A quote unquote catalyst gets us out of here. So what runs through your mind is, so we just happen to be here when there's a catalyst. That's how you know, right? There is an algorithm. That's how you know this thing actually has a method to its madness. Okay? That's how you know. All right? So just want to reiterate that, the importance of reviewing that game plan chart. Reviewing the game plan. If you did miss this, don't chase, because we're now in a new dimension. We're in a new dimension. Okay. This is mentally draining. I saw 30% close, and by the time I'm out, the numbers look very. So this candle here, right? It's very hard for the contracts to price it in. So because you saw initial pop, and if you sell it, if your order goes in as this candle is dropping, right, and then it continues to pop. So it just really depends on how quickly you close it. Sometimes you get the short end of the stick. All right, but the main thing is you're up on the day. All right, main thing is you're up on the day. All right, and this one, to be honest, I wasn't expecting something like that. All right, what I was more expecting was for us to come, put ourselves in position for that break, see if we can get above 669.18, and then we get above it. And then the buyer step in aggressively and push us back above this PML. All right. So, but what I do want to reiterate is the calls in this territory is not random. It's not random. It's not just, hey, you know what? We just feel like taking calls here because the market is down. And we set the standard for what the risk is. All right. So if this does break down, I do get invalidated in that case. In that case, if I do get invalidated, okay, in this case, in a different universe, say this takes place. Guess what? I close out here, and I'll reassess again off of this level back the upside, as long as we're trading within that green box, that call box. Once we create separation away from that call box to the downside, then I will flip. Has been proved otherwise, right? So I don't like to short into the key zone unless maybe a breakdown into it. But outside of that, at the key level or at the key zone, breakdowns and breakouts, right? That's typically not my strength, right? My strength is not breakdowns and breakouts. Can I play breakdowns, breakouts? Absolutely. But my sweet spot, right, is having a position into the breakdown and breakout. All right. So save this breaks down, cut the trade. Once the trade gets cut, we'll reassess. Okay. So first shift, about 11 minutes left. 11 minutes left. If I was one trick pony, I would have been a 5-minute hammer on that level. Patience is key. Biggest problem trading. Tesla right at the 15-minute orb. Tesla did have that inside day, so Tesla could be interesting there. I'm going to let first shift close out. So we saw a lot of action in first shift. let the euphoria kind of subside. This was a nice push. And let's get back down to earth. So I did get stopped out here. So don't forget, we did get stopped out here 14%. All right, so I would say this stop out is 10 times better than this one. All right, because this stop out allows us to take advantage of this. If I'm still holding those puts, if I'm still holding the calls up here, right, even with this pop, what's going to happen is you're going to see a pop like this, and you're going to try to size, maybe reduce your average costs and add more size to the position. And then you get deflated and it goes back to the downside. All right, so this, I would say this, trade manager wise, this was better than this. All right. The way we traded, the way I managed this loss in comparison to the way we managed this win, this is more important than this. I would even say this entry was a good entry, but I like to keep my entries close to those key levels. In between, I like to try to stay clean. But that hammer out of that territory, right, what we're showing you on the other chart is what really helped us get past that point. So let's take a look at Tesla. Now we're above VWAP. All right, so let first shift close out. First shift close out. Smash the like button, everyone on YouTube. Make sure to subscribe. Make sure to join our community. We lead with education every day. We're live every single day. The goal is, God willing, to be live 252 days this year. Out of the 252 trading days, to cultivate that community, to give you the support you need, to really take advantage of the opportunities the market provides every day. All right, take advantage of the opportunities, and we can all do it collectively. All right, by sharing, by building the community, by encouraging one another, going through the ups and downs together. All right. Tesla right now, 15-minute orb. Let's take a look at Tesla. Tesla was on high watch today. Was inside on the day on Tesla. Do we have any strat traders in the chat? Strat traders in the chat. Anyone trade the strat? Anyone trade the strat? So certain strategies gain popularity from time to time. So certain strategies gain popularity from time to time. Right? There's like seasons. Some strategies get popular over time, and some of them they kind of fade and come back. Right? So usually the beginning of the year, different strategies start taking off. Right now we're starting to see some popularity in the strat. I do incorporate strat methodologies into my system, but I don't solely trade the strat. I don't solely do one thing. Right? I incorporate the best elements of everything. All right? But if you can see, as far as strat is concerned, because the strat says the same thing. If you understand candlesticks and what candlesticks are, the strat says what everything else says. Okay? So it says the same thing. So the strat is a hammer candle. There's a 2 down, hammer, 2 up. All right? This is known as the evening star setup. Same thing as a 2 down, 2 up. So it's not saying anything unique or anything new. It's saying the same thing, but in a more systematic way for you to understand. It's classifying those candles by name. All right, so nice rejection up here as well. Nice rejection there. We kind of hit a limit there, continue to push back the downside. We're using the support. So we broke that resistance. And this resistance, we drew it relatively early and see if we can put enough pressure on the support to push back the downside. Tesla did trap. So what Tesla did is it did the inverse orb. So it took the orb traders to the downside to the upside. It took the orb traders to the upside to the downside. Okay, so it did the inverse. Okay, inverse on Tesla, inverse orb. Inverse orb on Tesla. Anyone else? Anyone else take any trades, guys? Let me charge my phone real quick. Let's take a listen to CNBC while I track down my charger.
Back in July, and now it's under 90. It's a management team that's been very sensitive to the value of their stock, and it makes perfect sense to us that a few months ago it made sense to issue shares, and today it makes more sense to do that in stock.
Yeah, I think many Netflix shareholders still sort of trying to grapple with the strategic rationale for the deal. Many perhaps have chosen to sell, hence that sell-off in the stock price as they move forward potentially with the deal. Do you think the board, because Paramount obviously has a different view, they say we have been disadvantaged, we have value.
Okay, back, able to track down that charger. We're about 5 minutes away from the conclusion of first shift. If you're just jumping in for the first time, let us know where you're joining from. Long-time viewers, take the next steps. Join our community. There's 8 or 9 spots left on the trial plan. Take advantage and put yourself in position to win and join our supportive community. We go through this every single day. For those of you who are brand new, smash the like button. We're live every single day at 9:30 a.m. Eastern. We did take 2 trades. This one kind of a couple of seconds short of executing it. A lot of people did take advantage of that, so congratulations. But again, if the trade kind of slips and it doesn't come back in, I just let it go. The reason why I do that is because I don't want to play the chase game. Oftentimes when you start to chase, all right, you end up in last place. All right, so it's either you're in sync, you take advantage, you're present at that particular moment, or you get that initial retest, come back into it, because this entry's all the way here. That's the best entry, best seat in the house. Or this one as well. It did come back, kind of technically retest, but at that point we're at 9:54. So I'm kind of waiting for that 10 o'clock. So even if I was to get this, I'm taking the majority into this territory, and then runners beyond that. So first trade stopped out, 1 trade missed out, and last trade took to push the upside. Okay. All right, so the question in the chat for today is, what's your biggest struggle in trading? So what's your biggest struggle in trading? So the options are over trading / gambling, no strategy / system, cutting losses / taking profit, or FOMO. So far, make sure to vote in the chat. So far, 40% of the people who voted on YouTube are saying over trading and gambling is their biggest struggle. Right behind that is 29% a piece for no strategy, no system, and cutting losses and taking profit at 29% as well. So no one on the FOMO side. All right, so we'll address each of these pillars, and I'll give you a framework to follow to put yourself in position to not fall susceptible to one of these challenges. Are they going to come up? Yes, but you're gonna have to have proven frameworks to minimize the frequency at which you're over trading, you're gambling, you have no strategy, no system, you're trading based on that, you're not cutting losses accordingly, you're not taking profits where you need to. Right? We're gonna go over that at 11:30 to 12. So we'll do a whole discussion on that. Okay. Minus $10, minus 30 on calls. It closed at minus 30. It was only like $14. Okay, good management. Too many times I see my losses turn green after I close it, so it makes me want to hold. Yeah, that's the tricky part with the market, right? It's luring you in, right? It's playing the you know how nana boo boo, you can't catch me. That's essentially what it's doing, right? You stop chasing it because it's not moving, and then when you leave it, it starts to run, and it starts to say nana boo boo, you can't catch me. You try to chase it, it's no longer there, right? So great job on continue to stick to your rules. That's going to be key. Struggling with precise entries. If you notice, the price action has been a little weird, right? What I mean by that is, if you trade the 1 minute for long enough, you understand the movement of each of these candles. Past few days, the movement has been a little erratic. Although we're seeing a significant increase in the IV, and we're seeing a significant increase, not a significant increase, but gradual increase in the IV, and a pretty significant increase on the ATR. ATR is now moving $1. So before CPI and PPI, we were moving about 20 to 30 cents per 5 minute candle. Now we're moving $1. So huge expansion on the ATR. So what that means is it doesn't take a lot for you to be wrong quickly. It doesn't take you a lot for you to be in double-digit profit as well. And if you're not tracking how much ground we're covering, you won't be able to tell the difference. All right, so if you just look at this candle here, this candle looks like a regular candle, but lo and behold, this candle here, okay, is 73 cents. Okay, that one candle is 73 cents. That one candle is 73 cents. Prior to PPI, CPI, we're moving about 20 to 30 cents per 5 minute. So these candles are massive. All right, these candles are massive. So in this case, protocols you can follow is size down. Sizing down is not a bad thing all the time, guys. Sizing down, one way to widen your risk can be sizing down. If that makes sense. Right, not recklessly widening your risk. So say, for instance, instead of taking 20 contracts, 15% stop, you can say, hey, you know what? Let me take 10 contracts with a 20-25% stop because of the environmental conditions. Or let me take 5 contracts with a 20 to 30% stop. You're adjusting to the conditions. So you have to make these decisions, right? As a market participant. Nice breakdown there. Once the support gave, starts to break. All right, so those are the variable things that take place every single day. So we made a push to the upside, came into that weekly 50% retrace, daily open, collapsed back to the downside, and now we're looking to potentially end back up at that daily downside target. So who got paid? Bulls got paid here, bears got paid here. Right, so once this support gave, the same support we're using to guide us into that territory, once it gave, led to a breakdown. Okay, so now that leads us into the end of first shift. First shift is officially in the books. Let us know you did in first shift. If you're green, if you're red, how many trades you took. Try to review your trades. See how you're doing so far from a mental perspective. If you're over trading, if you're missing opportunities, if you're in line with your plan, if you're kind of out of line with your plan, this is the time to make that adjustment. Okay, make that adjustment. Make notes in your journal. Once you do that, then you earn the right to make another trade. Before you take another trade, ask yourself, what are you looking to trade? What are some levels you're looking for price to get into? What are some levels you're looking for price to interact with prior to taking any other trades? So first shift is officially in the books. Took 2 trades, stopped out on 1, caught this nice push to the upside. I missed out 1. So going into second shift, I know what the setups to look for, some grabs. Looks like maybe some continuations into grabs. Just got to be a little more present. Try to keep my entries as close as possible to the key levels and make that adjustment as far as the ATR front is concerned. Right, as far as the ATR front is concerned, we are moving about $1, close to $1 per 5-minute candle. We are seeing some aggressive moves. So that proper adjustment has to be made. So what's going on so far? So in this case, we sold off. All right, we sold off. All right, we can all agree we sold off. Okay, we sold off. We came into this into this call zone. We go 2 down, 2 up, 10 minutes of buying to lead us into the top of that territory key zone. Of course, we have a key zone there. You can't see it unless you have it drawn out. And then now we're selling off for 5, 10, 15, close to 20 minutes to the downside. So in this case, if you're looking to go long, if you're looking to adopt a bullish line of thinking, you want to participate near these lows. See if you get some sort of combination near these lows. Your invalidation marker would be it's a continued breakdown. If it continues to break down, then you're wrong. Okay, it's okay. It's okay to be wrong. All right. If you're looking to go long, save a double bottom, grab these lows. If it doesn't transpire, you don't need to hold on forever. Right? If you can clearly see you're wrong, 1 being you're structurally wrong on the chart, 2 being your contracts have violated your risk, that means you're wrong on both fronts, then there's no reason for you to hold the trade. All right, because now you're going from trading strategy to trading hope. Hope is not a strategy. Okay? Hope is not a strategy. Okay, hope is the most addictive drug in the market. Hope is a drug. And when it comes to the context of the market, of trading, hope is a drug. All right, so once you start to hope, okay, hope is like dope. Okay. And again, in the context of the market, okay, very key that we understand that. In the context of life, you need hope. In the context of the market, hope is dope. If you don't have hope, you're hopeless. I struggle selling when I'm losing. I keep chasing with the hope it will make a big turn. I end up losing everything. Right? So what's really holding you back at that particular point is just having that fine defined risk. This is my risk. Maybe even having a fixed risk on your account. So some brokers allow you to do that. Say when you enter the position, say you have a fixed 20% risk that's set, just to get into practice. So sometimes when you do enter your position, they allow you to say, especially on Webull, I do have a video breaking it down, allows you to click an option where it says 20% risk, 30% risk, 15% risk automatically. So you do less thinking. So that might be the best practice if you struggle with closing trades. So it's to remove yourself out of the equation. Okay, remove yourself out of the equation. Have a preset until you're comfortable. Right, that's the easiest fix. Right, or the simplest fix. I don't like to use the word easy. Nothing is easy. Okay, if it's easy, it's not good. All right, so the simplest fix is that. All right, so preset your risk. Whatever your stop loss is. If it's 15%, 20%, you can even adjust it to dollar amount, whatever you're comfortable with. So you remove yourself from making the decision, do I cut, do I hold, so you're just playing the chart. So that will get the ball rolling as far as getting better at risk management. Because if you can get that down, right now you can enjoy the upside. Now you can focus more on what strategies can I use? Right, what strategies can I implement? Okay, to capture this part of the move, that part of the move. Now it becomes a game of really finding high probability setups. All right, you can have high probability setups, but if you have, for instance, say you have a high probability setup, 70% win rate. It doesn't matter during your 70% wins. It doesn't matter how much money you make if you're giving everything back on the 30% of those losses. Right, so high win rate. Right, but the profit factor is low. The profit factor is below 50%, 0.5. Right, so you have to find a way to put a stop to it, because if you can cover that side, right, by removing yourself out of the equation, at least now you can focus on something else. So maybe size down, okay, until you get used to it. Build that confidence, build that routine. And maybe you want to do it on both sides. You gotta say, I'm going to have a 15% stop, cut, 15% TP. So you might say, hey, you know what? That's 1-to-1. Yes, it's 1-to-1. But if you have a win rate, if you can win 65% of the time, so if you can win 6 to 7 times out of 10, you will be profitable just with a 1-to-1. Right? So maybe just presetting the take profit and maybe just presetting the risk when you get in. So you don't have to make that decision. And over time, when you get good at cutting those trades, cutting those losses, you can take back control. All right? I don't like to use a preset because sometimes it gets a little manipulative. As the underlying is moving, sometimes they wick and take your stop out. Right? I'm just paranoid. I've seen it happen a couple of times to me. So from that point on, it's very rare, right? But if you trust yourself to cut those trades, then you don't need that. But if you're still developing that trust, that internal trust with yourself, which is completely normal, right? Have a preset. That makes sense. One trade, small red. Hope is a trap. Hope lost me thousands. Risk management has allowed me to be green past 2 weeks. Look at that, guys. Great job, Sancho. Great job. 2 trades so far, both green. Cut IWM runner 14%. Re-engage with puts 20%. IWM resident IWM. We have a couple of IWM traders who crush IWM day in and day out. Also, I don't buy with unsettled funds like I used to. Small position, but I use up to 2K into the position, unsettled funds. That'll kill me a few times. Right? Again, you can do a lot of damage by using as long as you're not close to blowing up. You can do a lot of damage, especially with small accounts, 1 to 3 to 4 contracts at a time. You might not see it right away, right? It's boring. But if you can do it for 20, 30 trading days, it starts adding up. But most traders have an unrealistic expectation. We have a warped perspective of what trading should be, right? Unless you're making $5,000, it doesn't count, right? So you can get there slowly but surely. Slowly but surely, right? If you just bring your expectations back to earth, be systematic, treat it like a job, equate the dollar amount to every day. Equate the dollar amount to every day. All right. What I used to do is I used to keep a $100 bill, okay, on the desk. Just keep a $100 bill on the desk to remind you that every time you don't take profit, there's money in your hand, but you're just saying, no, I want more, and you're giving that away. Even if it's a dollar bill, leave it on your desk. All right, so try to bring it back to reality as much as possible. Like a job. And what you realize is 60, 80, 90, 120, 150, it starts adding up after 20 days. But most people, they just want to hit it out the park, out the gate. Even if you do hit it out the park, out the gate, right? How many times can you hit it out the gate? How many times can you hit a home run? You can't make a living hitting home runs every day. That doesn't exist. Right? There's no, that doesn't exist. There's no home runs every day, all day. As you take the base hits day to day, you open yourself up for home runs. You put points on the board. Right? And sometimes you're just in position. You're just in position for a home run. The market just, right, throws you a nice ball. And you hit it nicely and it goes out the park. But if you're swinging for home runs every day, it's not sustainable. All right? The whole point is to sustain. Okay? Sustain. So we're just chopping around here. See, at least we can grab first ships lows. That'd be great. I'm in Robinhood. I'll switch to Webull. Okay, absolutely. Again, guys, smash the like button on YouTube. Days like today, I'll take the small profit and be grateful. Price action is very trappy. Yep, it's a high stakes game. High stakes game. The stakes haven't been increased. 94 cents per 5 minute candle. So, as a trader, you have to make those adjustments. So now it's okay. You have the variables in front of you. Okay, how can I respond? It's like you're playing a game in inclement weather. So if you're playing a game in inclement weather, all right, it's snowing, it's windy. You're gonna football analogy. You're gonna more than likely go to your running game. You're gonna try to keep the ball on the ground. You're gonna want to throw the ball all over the place because of the weather, because of the conditions. Same thing. It's a nice little drop there. Probably a rejection out the waves. After dropping back below VWAP. Yep, nice rejection out the waves. I want to see how we interact with 687.49. So this high, okay, this high looked like we're going to reverse everything, but this high just turned out to be a lower high. So now if these lows get compromised, now we have a series of, let's move this. This is already expired. Okay, we already discussed that. So now we're tracking this channel here. So we got a high. So far, the major highs, most significant highs. High, lower high. Low, do we get a lower low? So if I'm bullish, I'm looking to take that lower low into potential push into a higher high or just equal highs, maybe these highs here. Okay, so the question is, do we get that lower low, grab first shift's lows, and continue to push the upside? That would be counter trend trading. Even though you're taking the lows into potential highs, you're still going against the overall trend because the overall trend is going south. It's going south. All right. Let's get the likes up on YouTube, guys. Make sure to like the video. Make sure to subscribe. Let's see how many likes we got. We had about close to 200 people stop by so far. If you're a first-time viewer, let us know where you're joining from, as always. Okay, our goal is to get to 1,800 subs. 2,800 subs. All right, by the end of the month. We can do it. We're still a small channel, growing every single day. Leading with education. All right, and really building. Okay, building sustainable community. Same thing. Same way we trade is the same way we build our community. Nice and slow and sustainable. All right. So we continue to push. Qs fell off a cliff. Can we take off? Okay, take this off. Take that off. Q's falling off a cliff. Dow falling off a cliff. Orb is 438.83. Another breakdown below Orb. First shift low grab, looking for a reclaim. Looking for a reclaim, so trades from this point on, we'll use less size. Keep in mind, we're at midweek. So midweek, you don't want to overthink and think about the finish line, but you covered just as much ground from the beginning. There's as much ground left from the beginning to where you are to the very end. So you want to start thinking in the back of your mind, positioning yourself for Friday, for the end of the week. Position yourself for Friday. And again, this has not been an easy week. There's no easy weeks. I'm not going to sit here and lie to you and say there's going to be easy weeks. Everything is, you have to fight for everything. Everything is a fight. Okay? Everything is a fight. I'm looking at the 688s. If we can get that reclaim, if no reclaim, retrace, reject, counter, trend, trade. If you're looking for rejection, at least come into that bottom of that buy block, sell block here. That coincides with the waves, that'd be great. Right there. So we're below this key level here, 687.49. 687.49. So a nice little key zone between these two areas. We officially closed below that call zone. Okay. Let me show you. On the 5, on the hourly, still up for grabs. All right, look at that. 15. 1 hour. Hourly is directional. Hourly selling off aggressively. So we bounced off it initially, not enough to get anywhere. Now the 685s are looking appealing. Everything is selling off. The Qs are selling off. The Dow's selling off. SPY is selling off. Wow. Wow, wow, wow. Anyone babysitting puts? The Great Bambino. To manage quotation is important. 20 EMA is at 686.48. 686.48. Just slightly above 686.38. I have that next key level. And we're headed towards yearly open, guys. Yearly open is all the way at 685.71. If we take out these lows, okay, we're going to become directional on the weekly. Interesting. Okay. Interesting. So looking for third trade here. So now the further away we get from here, the more interesting it becomes for a retrace reject. Technically that 1 minute candle, okay? All right, so if you're a pure technician, you know on the lower time frame there's a retrace reject. Case in point, if I drop down to the 15 second, there's a 15-second chart. All right, 15 seconds. You can see it's a retrace reject. What does that translate to on the 1 minute? This. Right, but we don't need to get that granular for now. But I do want you to know some retrace rejects can just happen on one candle. A new 15-minute candle here. Actually, no new 15-minute candle here. I take that back. We're about to get a new hourly candle in the next 9 minutes. So we swept first shift's lows. This is resistant until proven otherwise. We do have a key level here. That goes all the way back to that weekly downside breaker. 686.38, and then we have 685, and we have 685.71, and of course 685 psychological level. If we continue to push, we have January 5th's G50. That should be expired. All right, so pretty good sell-off here. But now on the daily time frame, do me a favor on the daily time frame, and go see if we're in that zone, in those previous all-time high zones, because this can start opening up the door for potential swing opportunity. Okay, back to the upside if we can test that 9 EMA. Once we test that 9 EMA in that zone, get that candlestick combo. We get that nice push back the upside. Okay. Drink of choice for today is Alani. All right. It's pretty good. Yearly open 100%, 100% Artem. We're headed towards Jan 5th gap. Yep, exactly. So Elaine is always on point with the gaps. We won't miss any gaps. As long as she's in the chat, I promise you, you're not going to miss any gaps. Okay? Any gap updates, gap down, gap up updates, always on point. She tracks all that stuff, so we do appreciate for you always keeping us up to date. Okay, let's see. Okay, we did collapse. All right. We did collapse. Okay, so where did we collapse from? So now I'm telling you, everything makes sense after the fact. That's why everyone seems brilliant in hindsight. All right, but you can see this channel we discussed yesterday is starting to wear. Some wear and tear behind it. We start to chop. We get that final bounce, which was a trap, and we get a collapse, a gap down, sell off, bounce. We were long on that bounce, immediately close profit right off that bounce. Whenever I see an impulsive candle like that, I close out, and then of course we start to drop. So in hindsight, this was a dead cap, 10-minute dead cap bounce. Like a 10-minute dead cap bounce. Now we are headed towards the Jan 5th gap. This is it. There's a couple of levels we have before that, but we're headed towards that Jan 5th gap. So the most important level before that we have is right here. That might be before. Okay, that's so that weekly downside breaker. This is what I want to bring to your attention. So that Jan 5th top of the gap is the same level as that weekly downside breaker. The reason why I gave that weekly downside breaker, I kept it as 1, is because that's precedence over that gap. But this weekly downside breaker is actually 2 levels. It's 2 and 1. So again, bears, wait for the flag. My bears in the chat, wait for your flag. Let that continue to build up. I'm looking at SPY Tesla here. It should be SPY. Okay. See that retrace rejecting this territory. I want to see what does take place. If we get above it, that would be a sweep, right? Sweep those lows, push back the upside. So UPO applies. If you're looking to go long, UPO. If you're looking for this resistance, bearish price activity in that territory. I was looking at Tesla there for a minute. Look at that. Look at that volume imbalance on the Dow. You're going to see lots of volume imbalances on the Dow all the time. The Dow is notorious for volume imbalances intraday. If you take a look at the Dow's chart on the 5, right? That's a huge volume imbalance there. So it's notorious for that. How long did it take you to learn not to revenge trade? I just got tired of losing. At some point, you just get tired of losing, and you know that the losing is completely your inability to manage your emotions. All right, so for me, the losing was my inability to manage emotions, being erratic, being all over the place. When I'm in a win, I'll be so euphoric. When I'm in a loss, I'll feel horrible, and to alleviate that horrible feeling, right? To get rid of that horrible feeling, I'll look for the next trade, and I'll keep trading until that horrible feeling is gone. But what ends up happening is you start over trading and operating out of revenge trade to remove that horrible feeling of losing. So once I started to frame losing the right way, okay? Once I start to frame losing the right way, understanding that it's a cost of doing business. All right, I can't be emotional and erratic when I'm doing business. It doesn't do me any good. When I execute a trade, it's like I'm buying inventory. When you're in business, sometimes you get inventory, right? Your objective is to get rid of the inventory in a timely fashion, okay? And to generate revenue on that inventory. Sometimes you get a bad batch of inventory. Sometimes business is slow, and you lose money or break even on the inventory. So you're not going to get emotional and just close down your whole business because you didn't make money on one batch of inventory. Same thing with trading. You're not going to close down your entire shop of trading because you took one loss. So you have to have parameters in place to protect your capital, to make sure you're not over leveraged, right? So on and so forth, to give yourself the best chance. A lot of trading is you're in your own way. It's almost like removing yourself out of the way. There's a lot of stepping on your own feet, blocking your own blessings, a lot of that. All right? It's almost like when you're trading, you yourself are your biggest hater. All right? You're the problem. You're just blocking yourself, stepping on your own feet. And a lot of it has to do with self-sabotage and a lot of psychological underlying things. But it gives you the chance to expose those things, to bring those things to the surface and really work on it as well. All right, so what really helps is the business approach. If you lose money on a batch of inventory, it's not the end of the world. But you can't lose all of your capital. You can't go all in on a certain batch of inventory of a certain SKU. Right? So if I have a shoe store, a sneaker store, I can't take all of my cash and buy one pair of sneakers and at size 10 and YOLO all the cash I have into size 10 sneakers. No, I got to make sure that I have a cash pile I got to make sure I get, hey, you know what? I get 5 different sneakers, however many sneakers, whatever is popular, and different sizes, and I have to manage the capital accordingly. Right? Using a sneaker store analogy. If I have a sneaker store and say all of a sudden LeBron retires and his last pair of sneakers, the last version he used become very popular. All right? I can't go all in on those sneakers because things change. There's a market. Right? There's a market for it. There's a marketplace that exists. Same thing. So you have to treat it like a business and not treat it like a hobby. If you treat it like a hobby, I always say trading is the worst hobby to have. It's the most painful hobby to have. Okay, the pain is not worth the gain. If it's a business, then the pain is worth the gain because you have to go through the motions, you have to learn, you have to build your plan, you have to lose a few times to get better. But if it's just hobby, you're just kind of dabbling in and out, right? The pain is not worth the gain. It takes up a lot of your time. It takes up a lot of your capital. It takes up a lot of your mental focus. So you have to draw the line from the very beginning, right? Is this the path I want to go down and learn? Or is this just something I saw maybe online and someone else is doing and I want to just dabble? All right? So very, very important. So when you put things into context, it always helps. If we go shooter here, 2 down, 2 up. Might take this back to downside on SPY. Looking at the puts here. 687s. So you get that continued push. If I can get my entry close to that territory, that'd be better. But of course, I want to use the waves. See if I can go with the trend this time. The rest of the indexes are selling off. Rest of the indexes are selling off. Do we have one more leg to the downside after that nice little pop back into these lows? So we know the trade, the next idea, this is the opportunity zone. Okay, I'll start calling these zones opportunity zones. All right, so we know if you're playing reclaim, you got to be patient. You got to let this breakdown be invalidated. Okay, if we get that breakdown below that 687.05, 687.08, I'll take it to the downside for the puts. Risk being those candles high, 687.49. I want a decisive push lower. So you get that close below it, and we start putting pressure on and back the downside. My invalidation marker is a reclaim. See that continue to push. Now I want that support to give. If it continues to go, I'll be there for the reclaim. All right. For the reclaim to take place, preferably I want the Qs to start getting their act together, which they are. I want the Dow to stay where it is. I want the VIX to show some signs of weakness. So again, I'm going to move it here to those candles lows. I want to close below there, 687.12. Preferably shooter on the 5. We are in the jaws that inefficiency. Okay. Rejection out that 687.49 would be great. Inside on the 5 currently. 687.12 would be critical. Want us to break below that level. Break below that level, that'd be great. Break below would be great. 687.49 right there. That daily downside target. So you can think of two ideas. If you think this is a sweep of those lows, you can take advantage of that sweep once it gets above it. Reclaim. It's currently using this path to the upside. Same thing as earlier. Remember that path we talked about? Same kind of formation in between two zones using the path. Right? In between two zones using the path. In between two zones using the path. Okay. Earlier, we got that sell-off. I think I erased it. But it came to fruition once we got above it. So again, we're not in the clear fully yet. Okay, not in the clear fully yet. Above above here would be ideal. Close back above it. 687.68. What will really help us in this case is if the VIX starts going south. If the VIX starts going south, the Qs continue to push, the Dow can stabilize. That'd be fantastic. So I was looking to go to the downside. I've got that break below it. No break, no entry. If we get back above it convincingly, I'll look to take it back the upside, play that first shift grab. All right, so I can care less which way it goes as long as it goes. And validation marker would be a break back below it, reclaim to the downside. So keep in mind we're still moving about 87 cents per 5 minute candle. 87 cents per 5 minute candle. So I'll wait for this one. I'll be a little more patient here. That 15-minute reversal is on 687.98 territory. If we break below here, right? If we break below 687.37, hold. I'll be there to the downside. Right, so really trying to see what takes place in this territory. That complete engulfing would be great. So sellers are trying to step in here. They're protecting this territory with their life. Okay, if they can do that, I'll become a seller. Somewhat of a volume imbalance there. Okay, let that candle pop a little bit. One little pop to the upside, I'll take it. To the downside. To reduce the price there. Starting to go, fell below 687.37. See if you can just get one little pop, one little pop. That was nice. That 5 minute engulfing, if it gets below 687.07, it will become an engulfer on the 5. Just need one little pop, maybe a wick, and then we'll look to take it back to downside. If you caught off that 687.37, you're up about 20 cents. Main thing is don't chase. If you caught it off here, living large. Right now, you're asking for some follow through. We went 3 down on the 5. It's very bearish. Just need one pop to the upside as this one potential wants to get back to those lows. Okay, Jan 5th gap. A nice PML break and retest. That was beautiful. That was gorgeous. Anyone catch that rejection there? Got that rejection. Great job. I just need one little pop. One little pop. I don't want to pay for the contracts here. I want to pay for the contracts maybe as close as possible to here. Sometimes if it just continues to go, maybe get one little bounce. Ideally, I want to keep it as close as possible to there. Okay, 3 down on the 5. On the 5 went 3 down. Bearish engulfing. That's what a 3 down is. Okay. So how many of those red candles do we have? 1, 2, 3, 4. Since 10:51. All right. So about 18 minutes, about 20 minutes, under 20 minutes, 3 of those candles on the 1 minute time frame. Okay. Let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. Make sure to join our community so you can be in position to take advantage of the best opportunities SPY has to offer and a handful of names. We have 14 likes currently, guys. We have over 200 people have joined the stream so far. So let's get the likes up. If you're enjoying the content, continue to smash the like button. That's the number one way you can support the channel. All right. At some point in time, this channel was not sent out to you. You weren't aware of this channel, but since someone liked it, the algorithm sent it to you. All right. So again, there are traders out there who could really find value in this channel. So do your end of the bargain and smash the like button. Going with one little push, push. If it breaks below here, then it's going to start to go. Right, I want to get it a little closer to there. One pop, one push. If you do play that 5-minute strat breakdown, 687.01. I'm just being pinching pennies here. Okay, I'm trying to get the best. The reason I'm trying to get the best entry is so if you have the best entry, okay, the next level of risk management is entry. If you have the best entry, right, that kind of helps you sit through the position a little bit because your risk management, your entry in some way, shape, or form is your risk management. That's the first layer. Your first layer of protection is your entry. Right? Good idea, wrong entry. So for instance, entry here versus entry here. Right? Two different, even though you can get the breakdown, if you get one pop to the upside, you get stopped out. Like this. Okay. One pop to the upside, you get stopped out. That starts to fade. I'll take it back to downside. Okay. Okay. Take the puts right there. I want that to hold. Use a very little size here. See if we start to wick here. If we do, that would be great. Fine line in the sand, 687.49 break. Fine line in the sand, 687.49 break. Down 4, average fill 112. So I want this 5-minute candle, the 5-minute candle, and a golfing candle on the 5-minute candle to hold up. I don't want that to get compromised. If it gets completely shifted, then I'll probably get stopped out there. Because I don't want that to turn into a reclaim. Okay, if we close above that 687.49, we'll get stopped out. On the verge of getting stopped here, 687.49. Okay, see that entry here? So if you have that entry here, you have a better entry and you're already in green, as opposed to mine is trying to get back to break even. Okay, now I want some follow through, some extension behind that. Continue to push. Again, being a little more patient today would make a big difference. Okay, make a big difference. Down 5% here. Want us to take back control over this cohort of buyers that stepped in here. Take back control. I want the Qs to start breaking down as well. The Qs can break down, that'd be great. Qs can break down, that'd be great. Again, close back above 687.49. We'll get stopped out. Now position is down 3%. So you see the seat. If you're here, you're green. If your entry's here, I'm down 6. I'm on the verge. If you're here, your risk can be that entire reclaim. So it's going to come down to that entry. So we need to take back control there. If we can't, it's going to set up that continued push. So on the verge, again, stopped here. Trying to give it a little bit of time. Down 7, down 8. Primary, no close above there. So I know my invalidation marker in this case, guys, is that reclaim. Is that reclaim. So once it reclaims, then we'll be wrong. If we get that close, I'll be out of there. New 5-minute candle here as well. Okay, I'll close it right there. Okay, close right there for 13. Stopped out 13%. Okay, if it sets back up, I can re-engage. So far, stopped out 13% there. I don't want that reclaim to come to fruition. Now on the 5, kind of moving sideways. All right, handful of minutes here. We did go inside on the 15. So if we can decisively break above this, I'll take it to the upside. So I might as well just wait. If we get back below it, break down. So what we're using here is the support to get us into that territory. Right, but you can see my invalidation marker is there. So as much as I want to continue to wait, this can easily go from 13 to 30 within a matter of seconds. 13 to 30 within a matter of seconds. Okay. So do we reclaim or do we continue to break down? Do we reclaim or continue to break down? If we get above 687, 68, I'll hop on the calls and use this as my risk with that close above it. If we fall back below 687.49, that'll be the invalidation marker. Because we're grabbing all of first shift's lows. But we need those buyers to start stepping in here. Level 2, a lot of sellers stacked there. See if there's some follow through behind that move. Want that 5 to go shooter. 2 minutes left. A lot of back and forth. So you can see the infighting. You can see the infighting taking place. That flag is setting up. The cues are starting to give. Flag on the cues is starting to crack. Flag on the cues is starting to crack. Okay. Headed back to downside. 687.41. Okay, headed back to downside. See if you can hold below 687.41. That 5 is looking like a shooter, but it's all for grabs. A lot of back and forth. So I'll let the dust settle here and let a clear winner be declared. From a risk reward standpoint, to me, the upside might be a little cleaner, right? Because we have a lot of room to go, a lot of room to push. The downside, right, is just reconfirms that that flag break. The 15, we're going inside break. The cues are bouncing off of that support. Q is bouncing off that support. So you get that one more push. Hold above 687.68. Reversing on the 15. Can we create separation away from this area? That's question number one, $1 million question. You're looking to short at the blue resistance before. Yeah, I did take shorts there, but now I want to see if I can get that reclaim. Right, now that we're above it. And my entry's all the way down there, right? So say if my entry was here, I can maybe still be in it to see if there's one last minute drop and on the verge of getting stopped. But now I'm looking to take this back north. So same level. Take this back north for that reclaim. So again, the main theme for today is just being patient. Patient trader. All right, see if we can come back for that retest. Slightly push in, and I'll take it to the upside. So you can see how this got invalidated, right? Invalidated, and then it goes back the other way. It's a high stakes game, 81 cents. So again, less size would be ideal. We are past that, close to the end of the second shift. Second shift comes to an end in 9 minutes. Oh, that reclaim was nice. Look at the Qs go, Dow go. So both trades, the first one and second, first one and this one, right? Just being a little more patient, catching the other side directionally, but it paid off tremendously. Anyone did catch that reclaim? If you did, if you were patient, you sat through it. All right, you were rewarded. Let's get the likes up on YouTube, guys. Make sure to like the video. Make sure to subscribe. Reduce the size to only SPY contract up on the portfolio from 3 trades down for today. Beautiful job. Beautiful job, guys. And we're trying to reclaim that territory. That was a nice reversal on the 15. VIX pushing back the downside. And then now we're trying to get back all the way there. So rejection. Finally breaks. Let's get the likes up on YouTube. Let's get the likes up on YouTube. 50 likes will do the giveaway. Man, that was a nice reclaim. Okay, in that case, risk management paid off once again. All right, paid off once again. But that reclaim was right there for the taking. Once it did reclaim, it just took off. It just took off, shot out of a cannon. That has room to 689.19. We do have this level here. That was a reclaim of first shift lows, right? Took some time, reclaimed it, and then now we're trying to make a push into this channel, right? We're trying to make a push into this channel, resistance to that channel. So we got that support there. We're headed towards VWAP. VWAP is currently at 689.15. VWAP is in this territory. So VWAP plus this key zone are in this area. Key level, I should say. Excuse me. So VWAP and key level are in this area. They're meeting right at that resistance. So if you're playing that VWAP reclaim or playing that VWAP rejection, right, your time to shine, your time to decide is coming up. So you have that key level, you have resistance, and you have VWAP all converging in this sweet spot right here. Okay, sweet spot right there. All right, this thing probably wants to get back all the way to that 693. We'll see. That was nice. That reclaim was nice. Today, theme of the day is patience, guys. Theme of the day is patience. Theme of the day is patience. We're 5 minutes away from the conclusion of first shift. The second shift. You got that reclaim. That's tremendous, tremendous patience. Now we're at VWAP. Do we reclaim VWAP? Do we have enough fuel to get back above VWAP? To get back above that daily downside target? And start to work our way into 690. Do we have enough fuel here? Do we have enough fuel is the question. Coming into it, resistance. VIX falling off a cliff. Keep in mind, VIX is elevated. All right, VIX is trading above 17. Do we break out here? Do we break that resistance? Reclaim VWAP. So the best seat in the house is based off of this reclaim. The reclaim was beautiful, and now do we have enough fuel to get us past VWAP, to get us past 689.19? VWAP was at 689.15. Slight difference there. Or do we reject our VWAP and get back to some levels? The 5 is showing strength. 15 is looking good. We're looking to reclaim that key zone. We're looking to come back to life. Okay, looking to reclaim that key zone. Still inside on the hour. But looking to reclaim this key zone on the 15. We went 212. We have that 200 EMA on the hourly at 689.46 as well. So slightly above VWAP, we have that 200 EMA as well. So new 15-minute candle coming in a minute. New 15-minute candle coming in a minute. New 30-minute candle. New hourly candle as well. On the hourly, we're inside. So once this hourly candle comes in, okay, if we break the upside of that candle, as long as we don't break that downside, we're going to start reversing on the hour. If we stay inside, it means we're still consolidating. If we break the low before we break the high, that means we're going to potentially continue to sell off and target low of the day. Target low of the day. VIX continues to push. If you want this thing, if you're in calls, looking to take calls, you want this thing to stay below 1740. VIX below 1740. New hourly, all the candles are resetting here, guys. Reset on all the candles. Okay. This hourly candle, the bottom of the hour, is already directional. The other one is still inside. So break of these highs, break of that view out, break of all that, that's going to be the hourly level. 2 down, 2 up. Let's go down to 15. So that level aligns with that hourly breaker. So a lot of things converge here. A lot of things converge. Now we're back above VWAP. Back above VWAP. See if that zone can hold. 689.18. We have POC at 689.92. What a move. What a move. Is that the hourly you got open, JB? So this move is very similar, very reminiscent to this move here. All right, kind of doing this, and it gets that pop. So in this case, we did take out first shift highs, second shift highs. New shift, took one trade in second shift, stopped out for the puts there. Could have been a little more patient. The risk reward is on the upside, but decided to see if I can get that push into those lows. And now going into third shift, we'll look to take one more trade and then wrap it up. All right. Any questions, guys? Let me know. So it's just been outside of this pop here. It's just been being on the wrong side, being a little impatient, getting stopped out, and managing risk. That's been the theme of the day. The Qs are never ways to go before getting to PML, I should say. Never ways to go. We're getting that grab of first shifts, second shift highs. Getting that grab of second shift highs. If we can stay below VWAP, that nice little slide to the downside can provide an opportunity. See here that nice closure on the 5. Two up, two down shooter. That'd be great. If it turns into a hammer, continues to accelerate, then more than likely wants to continue to push. See, one more push. There's 1 minute. That 5 minute candle has about a minute left. A minute left. Did we reach some exhaustion after grabbing those highs? Did we reach exhaustion after grabbing those highs? Second shift highs. So keep in mind, we are directional on the 15. We're directional on those time frames, but we did grab those shift highs. Usually when we grab those highs, we typically try to make a move back to downside or reset. So does this have enough room? Very similar to what we saw here. Does this have enough room to potentially do one of these maneuvers down there and get back to this territory? Okay, we went 3 down on the 5, 3 down on the 5. We got a engulfing candle VWAP on the 5. Engulfing candle on the 5 here as well. Key level 689.19. You're waiting for that 5-minute breakdown. That's about between VWAP and that breaker. About 50 cents. Wow, what a drop. And there it goes. And there it goes. Again, if you're chasing above, it goes back to downside. I'll call 27% over the day. Good bounce. I was taking the kids to school, missed that one. Still got 9 DTE call, gaining right now. I didn't pull back. I'll be there for it. If not, there's tomorrow. Absolutely. Got out just in time. Good taking profit, right? Hit that exhaustion point. Grab those highs. Trap those buyers above VWAP and head it back to downside. And good TP. Right. Main thing is if you have your entry as close as possible to those zones in those areas, you give yourself a chance. Kind of been a little away from the zone, a little away from the area, kind of a little after the initial reaction. Wow, what a push. What a dump. What a dump. Anyone catch that? Okay, so now we're reconfirming because the waves on the 5 are still waving to the downside. Now we're just same thing earlier, right? Same thing earlier, right? It couldn't quite break it. It gets that pop, goes all the way to those key zones, and then starts to drop. All right. After it drops, it has a reaction and it drops again. So the critical juncture, if we're going to get to the lows of the day, it's going to come down to here. So if you're in already, right, you're laughing to the bank. So if you want long above VWAP, you have your risk mapped out, you just get stopped out. You have your risk mapped out, you just get stopped out. Okay. See if we can at least get a test. How far away is that here? See if we can come back at the jaws of that sell block right there. Again, a little away. From that key level there at 689.18. That's about so you can see the difference between that and this. That's the next best bet to catch it into here. So they trapped all the longs off that break, right? That was a nasty trap. Okay. So it is officially third shift. If you guys want to be eligible for the giveaway, let's get 50 likes on YouTube. 50 likes. Make sure to smash the like button. We got 40 plus people joining us this morning. I'm on the East Coast. So again, make sure to like the video. Make sure to subscribe if you haven't. And answer the poll question. We will address the poll question right at 12 o'clock. So far, it looks like 38% of you are having a hard time or challenge with cutting losses and taking profits. So the poll has shifted from over trading and gambling to cutting losses and taking profits. So that's the hardest. That's the current thing you guys are having a hard time with, and we will discuss that at the halfway point during the program. Okay, at 12 o'clock we'll discuss it. We'll show you how the different ways you can join our community, our supportive, dedicated team. Okay, let's see if we get one more push. Okay, headed back to downside we go. Back to downside we go. We're looking to target that blue box down there. If that crumbles, that support breaks. Okay, but we know where we're coming from. So do we have enough fuel from here to break below here and target those lows? So if you got the puts all the way down there, this is your target, and this is where maybe you're babysitting runners to see if you get that continued push lower. If you're looking to make a decision to the downside based off the interaction with that zone for that breakdown, use confirmation. Because that can turn out to be support. So you want to make sure that gets cleared. And that does turn out to be a breakdown of that support. We're back at that level like we never left. So this was a nice push for the reclaim. Don't take those profits. You give it back to ground zero. Ugly view up rejection. Today was difficult for me. 2 red trades, 1 green, still close today in profit. But I had to be honest, I'm lucky to walk away. Way too aggressive. A lot of gambling today. I really need to work on my discipline. I'm probably going to downsize and not focus too much on profit for the rest of the month. Just getting my discipline back. Beautiful job, Hero. Again, these conditions are not easy, guys. Even if you're green, sometimes you know if you kind of just are green for being green and you're not operating on all cylinders. All right, so always good to make those improvements. For today, I kind of got lucky here as well. Right, this spiked the upside, but outside of that, the 2 trades that I did take stopped out. All right, kind of A little late to the party, or a little late to the party, already rejected, or a little too early. That's been the case, and that can easily be fixed by being a little more patient. So what I mean by being a little more patient is having that directional idea instead of going back and forth, having that directional idea. See if I'm looking to play that first shift grab, of course. Let the dust settle and wait for the reclaim to take place rather than exhausting mental capital here and trying to get back and when it's already gone. So at least didn't end up chasing. All right, so if you have that one little hesitation, right, hesitation will slow you down. If you have the hesitation, little hiccup, you're going to miss your entry, especially when it comes to scalping. And today's a day where I try not to chase. If you notice, if it's gone, it's gone. Right? If it's gone, it's gone. Okay, so now we went from all the way here from that key level. We break below it. We go 3 down. We start to sell off. We get all the way back to the floor. Okay? So if we continue to sell off, we're going to enter the jaws of that January 5th gap once we cross this line. This level, 688, 686, 38 is not only January 5th top of the gap, it's also the weekly downside breaker. If we take that out, that means that weekly candle, hover over to your weekly time frame, that weekly candle, okay, it has a massive wick on it. Massive wick on it. All right, let's go to the weekly candle for a quick second here. We want to go 3 down engulfing on the weekly candle. All right, let me show you. So we should be able to tell that without even going to the weekly. You can see. All right, so this candle is about to go 3 down. That sets the stage. All right, we wanted the pullback. People are saying pullback, pullback, pullback. Okay. Okay, we violated that 9, we're at that 20. So this is a pretty aggressive sell-off to say the least. So we're about 10 points away from all-time highs. All right, this sell-off is getting, with that gap lower, right, that sell-off is really starting to build some steam. So let's see if we can impact the weekly time frame and go engulfing to the downside, which would be interesting. Okay, we break below it, see engulfing candle. That tells us the sellers are there. And validation marker would be a bounce, and now we're headed back into the jaws of that gap. What a sell-off. Three trades, 2 lost, 1 win, about 1K minus 83. Maybe one more trade to the upside. Previous bounce level, 686. 686. I'm looking at 686.38. Maybe a grab of those lows. I have one more in the tank. Okay. So great job, guys. 4 for 6. Green on the day. Green today. Beautiful, beautiful. Even if you're break even, if you're a small red, if you followed your plan, that's a success. Right? Follow your plan, that's success. That's the hardest part is, okay, not getting those, when you start measuring results based on those dollar amounts, you're never going to be satisfied. So again, base it off of how closely did you stick to your plan. Okay, how closely did you stick to your plan? Green today, got too much red last year to close out on green. 100%. Great job, Sancho. You've been absolutely crushing it on the one-day DTEs going to next day. Right. That's going to really help your profits intraday, so you don't have to carry the load on your intraday trading. That's going to enhance it. So tremendous job. Anyone else on YouTube? How we doing, guys? How we doing on YouTube? How we doing on Strikers, on Google Meets? We have a handful of you there. For folks on YouTube, take a quick look at this video that goes over and highlights the features of our live trading and training mentorship community. We'll be back on the other side.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the SPY Strikers community and get daily live trading, clear pre-market game plans with key level probability buy and sell zones, over 4 hours of delay-free, ad-free, plus high win rate automates that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, even dedicated support. Stop guessing. Start trading with confidence. Become a SPY Striker today, and take your trading to the next level.
Okay, we're back. Again, if you're looking to join our community, go to smartactiontrain.com, smartactiontrain.com. SPY is at a very interesting place here, right? It is headed towards that yearly open. It is in the jaws of that January 5th gap. We are selling off. VIX is pumping. Qs are dumping. Did break their flag as well. The Dow is dumping. IWM is dumping as well. So synchronized selling across the board. Synchronized selling across the board. So that 3 down on the 5. 3 down on the 5. This was it. Once that sell block broke down, 688.63, 2-point drop. So see if we do the same kind of thing we did in first shift, right? We break below it nicely, we come back into it, tease it a few times, and then finally break. All right, the same kind of thing doesn't have to happen. But I want to see how much time we spend below first shift lows, if we can reclaim it, if the VIX can start to taper off here. And if you're interested in joining our community, go to smartactiontrain.com. Smartactiontrain.com. All right, smartactiontrain.com. Click the community tab. Everything you need is there. All right, you can be on the monthly program. Use the code trial30. You save 25% off the monthly. You can lock it on the yearly bundle. Right, one payment for an entire year, 12-month access. Everyone should be in the free tier Discord. That's pinned in the chat. All this is available to you. There's a few spots left on the trial for January. January enrollment, again, make sure to use the code and give yourself access to all the resources you need to become the best trader you can be. See if you can grab that 686.51. Again, this is going against the grain. Going against the grain here. See if we can come in a little bit. Okay. See if we can hold above that level. I'll take it right there. Risk being these lows. Right. I know we're on the verge of dumping. Very tight risk. High risk endeavor. If we break below those lows, I'll get stopped out. All right. I'm kind of front running that 5-minute candle. Close below 686.21. Get stopped out. Average fill 93 cents. So playing that reclaim early, see if we can start to go. VIX taper off. So I'm kind of in one of the, this is the early entry, as early as can be. Right, so sometimes when you're a little early, you're too early. We don't want that to take place into those lows. Okay, I'll cut right there for 11. So cut it right there for 11, and I'll be done for the day. So 3 trades, 3 stop outs, 1 worked in our favor. All right, gave it a quick shot there. Stopped out 11. Again, you can see we're still selling off, not fully recovered yet. If we can get back above it, that'd be more ideal. All right, for some reason, just very, very impatient. Very impatient today. Okay, if we can get back above it, clearly close back above it, I'll re-engage one more time. But it has to be a clear reclaim 5-minute hammer. So same trade, idea, different trade. Right, so some big, huge opportunities we got to be a part of. Those opportunities, got to be a part of those opportunities. This one here, this one here. So stop out here, stop out there. The best trade of the day has just been risk management and this 30% pot. Right, I mean, granted, the last 2 trades using less size, but still, just because you're using less size, I don't want to compromise and open up my risk just to be right. So I'll give it until a reclaim. If we can reclaim this, I'll be there. And then we'll call it a day. Ideally, if we can go hammer on the 5. So this is a BOG bounce along with a TOG bounce along with a weekly downside breaker. I'll reclaim. So that weekly candle, guys, we went engulfing. Weekly candle went engulfing. Weekly candle went engulfing. Best thing to do is wait for that 5 minutes. See if you can get a hammer there. Hammer, hammer, hammer time. MC hammer time. Still has about 2 minutes left. 2 minutes left. Green today. I got too much red last year. Okay, good. If you're in the breakdown, I mean, you're the one who's dictating the pace. You have all the leverage. If you're looking to go short, you might have to kind of wait to see if there's another leg lower. If you're already short, you're basically babysitting profit or babysitting runners. I want that reclaim, second attempt, decisively. Okay. See if we can take it there. Same idea. This time, see if we get that one more push. If we break below these lows, then I'll be done. All right. That 5 minute has about 50 seconds left. Still a little ahead of that 5 minute. Okay, see if I continue to push. That 5 minute, 40 seconds left. So that 5, if you're waiting for that 5, continue to wait. All you gotta do is mark out that candle's high. And get that 2 down, 2 up reversal. Okay. Up 4. See if they continue to push. Now as this 5 minute approaches, I want us to hold. I want us to give up that wick on the top of that candle. You see these wicks, wick down, wick down, wick down. I want that to maintain and get that close above second shift's lows. Okay, second shift's lows and start building the base there. Okay, new 5-minute candle here coming up. Okay, new 5-minute on this current 5-minute candle. We don't want these lows to get taken out. That's it. Simple as that. Did see green about 4 or 5%. So my risk is down here. 10 to 15%. See if we can hold. That 5-minute candle is inside, has not taken out that high yet. Has not taken out that high yet. The VIX can show some signs of weakness. That'd be great. In the meantime, before taking out our risk, all right, 5 minutes inside. Break above that 686.66 is the trigger. Okay, there we go. Okay, there we go. Up 8. Go, go, go. TP where you need to if you did take that. Take a majority off right there. At 8. Down to runners. See if these runners can start to run. See if these runners can start to run. So my NC for runner is this candle's low. I want us to continue to push back into 687.49. So mark out your NC. What is your NC? Keep in mind we have waves we need to address. We have a lot of levels we need to address. So this entry was significantly more patient than this one. All right, same idea, 2 different entries, 2 different results. So I need to just reduce, be a little more patient. Okay, be a little more patient. That's what I need to do moving forward. That might be fueled by a couple of missed setups. These runners, I'm gonna babysit them. I want no close back below 686.38. No close below there. Okay, up 13. Go, go, go. Up 15. Go, go, go. Take some more off right there at 13. And down to my last one here. Okay. No signs of weakness on the 5. So I want no close below this 5-minute candles high, that original breaker. Okay. Again, double-digit opportunity, guys. Make sure you take profits where you need to. Up 15. Average fill 92 cents. 17. Go, go, go. We have this wick up here that can give us a hard time. Okay. I'll close right there. I'll close everything at 17. All right, so nice little push. If we do pull back slightly, I'll take it. I'll take it in the jaws of here, but I'm okay with that. So the name of the game for me today has been just being a little more patient. A little more patient. Maybe again, I said it earlier, it might be fueled by a couple of missed setups. That's leading to over-indexing, trying to front run the move. But nonetheless, you guys can see that reclaim played out. If your risk is a little wider than mine, you're in the green. All right. If you use price action combination confirmation based off the level on the 5, you're in the green. So this thing continues to take off. All right. Anyone take that for that last trade? One last one for the road. The reason why I closed it is we're getting closer to the waves. All right. So I don't want to give that back up. So recovered some of this, a little bit of that, and don't want to give it back up. Right. So 17. Last TP there. And we can see we're having a hard time with those wicks there. And that's quickly, we're going back to downside. So it's a matter of just having those good entries, being patient, seeing double-digit figures, taking the majority off, babysitting runners, rinse and repeat a few times. Okay. Rinse and repeat a few times. And now that 5 minute completely changed. So that was a good TP. That was a good TP. If your target is all the way there, all the way back to there, you're discounting the fact that this went 17% plus in a matter of minutes. And then now, if you see it, you see it. But I'll be done for the day. I'll shut it down now. Okay, I'll be done for the day. All right, so just being more patient. When I took this initial entry here, all right, the VIX was still pumping. The indexes were still dumping. When we start to see that wick on that on the 5 there, more wicks, that gives us a little more confirmation. That doesn't mean it's going to guarantee to work, but at least, right, you're getting a little more confirmation, a little more signs of buying. A little more signs of buying. All right? So 12 o'clock, make sure to like the video, guys. Make sure to like the video on YouTube. Make sure to subscribe. Okay, excellent. Heikanashi Master. Heiken Master. It would appear that the market makers are burning all the 700 calls that are due to the expire on Friday, so I would bet that after Friday into next week, we get a bounce. If we get a breach of 679, we will flip into bearish trend. I can see that. Let's take a listen to CNBC, what's going on there. In the meantime, let me refuel the coffee. We'll be back on the other side. Make sure to like the video. Make sure to subscribe. We have about an hour left before the giveaway. The giveaway eligibility is 50 likes. 50 likes is the standard. All right? If you're enjoying the content, make sure to like the video on YouTube. Don't take the content for granted, guys. We're going through the process of showing you how to train you, giving you that analysis, walking through wins, walking through losses, and trying to provide as much value as possible. All right, so if you do appreciate the content, make sure to smash the like button. Make sure to subscribe, turn your notifications on, and of course, share as well. If you're looking to level up your trading, all the links are pinned in the description for you to see. Okay, all the links are pinned in the description. YouTube position has been down. Was like that the whole time? Let me see. Okay, let me see if you can see it now. I mean, I'm in no positions now, but I like it to be up. Give me 1 second. Can you see it now? 1DT 692 holding till tomorrow, $50. Good, good, good. Those low risk, right? Trades, low risk from the standpoint of you're willing to lose the $50, right? Don't want to go on don't want to say it's a gamble. It's because there's no strategy behind gambling, but it's more of taking advantage of the opportunity. All right, the risk being maybe the entire that $50. So the stop loss is a contract, which makes perfect sense. Okay, as long as the same rules apply. If it's going to use this nice little road to the upside, all right, it wants to seek at 687.49. 687.49. 687.49. Again, what you do with the idea, up to you. If you're going to take it all the way there, if you're going to take profit at 17, if you're going to move your break to stop break even, that's based on what the trader wants to do. Every trader has a unique perspective on risk, different risk tolerance, different contract size, position size, account size. The idea is the idea. You use it the way you need to use it. Last trade, 11.59. Okay, you took that one as well, Kevin. Okay, 10%, 11%, 13%. There we go, $65. 5 trades, 2 wins, 3 losses. It's minus 67. Okay, that was a nice 11%. Okay, 65. So close to break even, basically, right? Break even on the day. So in this case, got to wait for that grab, and now we're using this path. Once they support, the reason why we have to draw these paths is because until we get that higher high, okay, this can still be a potential compression breakdown. So until that's out the window, that's the path it's going to take. So you can use that trend line, mark it out. You can use that trend line to babysit. All right, so in my case, took 2 attempts, second one worked out. If I am going to say I did one thing right, is not chasing and just following risk. All right, just got caught on the other side a couple of times. Maybe overthinking, a little late, a little early. It happens, but even when those things do happen, guys, it's very important to still manage that risk. So we start off the day, right out the gate. Wanted to see a nice push to the upside, a little excited off the open. This was really appetizing. This is what I was salivating over. All right, I wanted to see if I get that push. Okay, that might have slightly got me overexcited. All right, saw that push, didn't get that complete break, but can't compromise on risk. Took that stop out. Waited. Nice little retrace reject out this territory. Just couldn't pull the trigger quite in time, right? And then it plays out. Comes into this territory. We walk through this setup. We get that reclaim. Nice little news pump to the upside, 30%. All out close. And then we continue to sell off. After coming to this territory, we get that retrace reject. I tried to take that retrace reject one time, and then this was opted to take that reclaim. Reclaim just took off. And then, of course, we came into this territory. I got stopped out there, came to this territory. A little too early. Re-engaged after setup a little more cleanly, and then took that there. So overall, one idea there, 2 trades, 3 trades, 4 trades, 5 trades. So out of those 5 trades, only 2 of them worked in our favor. Granted, from this point on, it's less size. Right, so it's been more about risk management and managing emotions on the day. Okay, we're still not in the clear. We still not have the flip to 5 yet. We still haven't flipped to 5 yet. So let me take a quick break, refill on the coffee. In the meantime, like the video, make sure to subscribe. If you have any questions, put your questions in the chat. We will be covering, all right, some topics. We'll be having an open discussion. Feel free to chime in about over trading, gambling, no strategy, system, cutting losses, taking profits, FOMO, based on the poll question. So whichever one has the most amount of votes, whichever one you guys are struggling with the most, we will address, and I will give you a tangible framework. I can't trade for you. I can't think for you. All I can provide you is a framework that you can apply, a universal framework, to help you minimize the frequency of the over trading, gambling portion of trading, minimize and have a systematic approach in cutting losses, taking profits, FOMO, and of course having a system as well. All right, all these things are important. Right, all these things are important, and we will address that on the other side of the break. In the meantime, smash the like button if you're in those calls. Manage accordingly. Use this support. Use this trend line as your road to this territory here. That's a good TP. All right. If you get that breakdown, okay, so bears, you're tasked with making decisions. If you're done for the day, put done in the chat. If you are done for the day, put done in the chat. Okay, if you're done for the day, put done in the chat. The agreement is when you put done in the chat, you are done. When you put done in the chat, you are done. Those are the hardest 4 letters to type for a trader is done. So, but if you put done, right, you're giving the community your word that you're not going to trade anymore. All right. So if you're done for the day, we've been already trading for about from 9:30 a.m. close to 3-hour mark. Put done in the chat, and I'll put the hardest letters in the chat to put done. We'll do the poll here shortly. All right. So no more trades for me. Off today, gonna go for a ride. Then hitting good old Costco for a hot dog. Good. Oh, you're in Cali, right, Sancho? Are you in Cali? So I think you can do a barbecue. I know Heroes from Cali. All right. All right, we'll be back. Smash the like. Giveaway at 1 o'clock. 50 likes is the requirement. In the meantime, enjoy CNBC. Let's pull that up. Our good friends at CNBC.
That's always going to weigh on names on any given day. I think longer term, however, the need for cyber is becoming even more pronounced. And I would argue that in a geopolitical climate such as the one we're living in right now, cyber attack becomes even more imperative to prevent, given the fact that it can be so disruptive for businesses. So I'd say there's, kind of put aside kind of China, U.S. That's always going to weigh on names whenever they're, in the crossfire. I would say longer term, however, the need for cyber as part of that enterprise stack is not going to be eliminated, and so perhaps we're just getting caught up in that software versus semi debate.
I just want to follow up a little bit on what Shannon's saying here. It's important to always think about positioning. Everything that Shannon is stating, that has been the thesis. We've all talked about it. We all speak bullishly about the need for cyber and cyber spending over the coming years. But now think about positioning and how positioning affects markets. And it's very clear that positioning is long and somewhat trapped in that sense because these stocks are just not responding to the bullish thesis that we've all communicated over the last 18 months. And you have to factor that into your investment decision. So if you are thinking to stepping into that trade now, let it unwind a little bit. Let some of that bullishness, let it be neutralized before you go take positions.
Well, I think part of that issue is that on cyber, and the reason I haven't been in it, I was in it a couple of years ago, valuations still are not attractive. The valuations on these stocks are egregious. So you've seen some disappointments in various quarters, and that just, I think, puts people back on their heels and saying, look, they're unreasonably valued. Why should I risk it? We have underspent China by maybe a multiple of 100 times on cyber. It's ludicrous, and we haven't woken up to that. If you look at the DoD budget on cyber spending, it's really nothing relative to the entire budget and the importance of it. So we do have to spend a lot more. The question is, where are you going to do it? Wait for the stocks to come
I think we're saying the same thing.
Yes, absolutely.
Because, what's happened, too, is people have just ignored the valuation and basically have said, no, okay, cybersecurity, we want to invest thematically around that. And you have to factor that into your decision when you're investing in these positions. Or if you're going to invest now, just understand the environment that you're investing in and understand it can probably be a little bit more punitive for a prolonged period than you might be comfortable with.
So, Shannon, I know you want to say something, but can I ask you, do you see any parallels to the healthcare trade last year? It started off very slow last year. It accelerated at the end of the year, and it's very similar to cybersecurity. You're going to need it. It's going to generate revenue at some point just with the direction everything's going. Any parallels there and the potential for a catch-up trade on the back end of this year when it comes to cyber?
There could be. I think what it comes down to, though, Frank, if you're an S&P 500 CEO or CFO in the earnings over the next couple of quarters, are you going to amplify your cyber spending or are you going to amplify your AI spending? And I think it comes down to there's a kind of a narrative around that. You know, from an enterprise perspective, companies could still be accelerating or continuing their cyber spend, but they're not going to be talking about it in this environment. They're going to be trying to put their flag in the ground on what they're doing in AI, because that is what has been rewarded by markets over the last couple of years.
Yeah, also, we had an enormous re-rating of healthcare stocks. So most of them were trading well below the market multiple. If you looked at the earnings generating companies in biotechnology and in pharmaceuticals, they were trading in the kind of 11 to 15 range, which is very different from cyber stocks, as we discussed.
Let's move on to financials. Take a look at the action there. We got some earnings reports earlier today. Some kind of, I guess, mixed reaction to what we heard from there. Carrie, you're nodding as I say kind of mixed reaction. What was your take on the earnings? Was there one bank in particular that stuck out in your mind as one that made you feel very bullish about the financial space today?
Oh, you know, financials had such a strong year last year. I think it's hard to be very bullish. When you looked at strategists' opinions of what sectors they are very bullish about for 2026, I think financials might have been number one for the majority of firms who commented, and that makes me nervous. You know, they had a good year. Everybody knows there's going to be more deals. Everyone knows with valuations and the need, I think, for some of the venture capital firms to take some money off the table and try to really bounce the IPO market. It's going to be good. I just don't know that I would rush into the banks right now until we see, you know, they get a little bit more of a pullback, honestly.
Well, I said mixed because we're looking at Bank of America beats on the top and bottom line. You're looking at Citi beats on the top and bottom line. Wells Fargo, there were some misses, but when you look at the analyst reports, a lot of them were very positive about some of the results. Specifically when it came to investment banking was one area that we saw some bright spots. Steve, I'm going to come over to you. What's your view on financials right now? Is this still an area, a cyclical area that you're feeling confidence in? Is this maybe one part of the market that does need the rate cuts to come in?
I'm still positive on them. Of course, my exposure is in Goldman, and it's one of my largest positions because of how it's moved since I've owned it. I don't see anything changing. I do see rates that are at least going to hold steady for a while. I don't know how much they're going to come down. Maybe we get another cut this year, maybe two. But I also believe that there's such a pipeline of transactions to do, and you'll need a cooperative market to do it. But that's just going to generate quite a bit of revenue for the banks. So I continue to be positive on them. Frankly, I'm not unhappy to see them come down post-earnings. It's a typical event post-earnings, but because it got a little frothy there. So I'm still there. I have no interest in selling any part of Goldman.
So kind of going full circle, last year volatility really helped the banks. It looks like we're on pace for more volatility this year. Is that a good setup for the banks going forward? I mean, with just so many issues, the SCOTUS ruling on tariffs, what's going on in Iran, what's going on in Venezuela, what could be going on with the Fed, not only Jay Powell, but there's also a Lisa Cook ruling that we're waiting on. I mean, there seems to be a lot of issues that could create volatility and give a boost to the wealth management business of a lot of these firms.
Well, let's hear from Goldman Sachs and Morgan Stanley. I think Goldman Sachs is reporting tomorrow morning, as is Morgan Stanley. They're the best at what you're describing. I also think it benefits the exchanges tremendously. I talk about that frequently. And whether it's the CME, whether it's ICE, whether it's Interactive Brokers or Charles Schwab, they are all in bullish trends and benefiting from the type of environment that we're talking about. And I don't think that environment's going to change. I think the volatility is actually going to elevate even more. So you probably want to enter CME into the conversation.
I want to add one more name in there, Robinhood. That's one that you own. Is that an area of financials that you think you want to drift into and maybe away from either the big banks or the regional banks?
Well, I don't think, I think it's different in terms of you don't want to say, okay, I don't want to own a money center bank, I want to own Robinhood. I think you're grouping Robinhood in the names that I mentioned as it relates to the exchanges, but you're also going to get the clear benefit from cryptocurrencies lifting, and that's what's happening early on. Robinhood is not specifically tethered to cryptocurrencies, and they've really brought in a very strong bench of intellectual capital to diversify the business model, and they've excelled at that over the last 18 months, and they're being rewarded for it. So I think it's a little bit more. I think they stand right up there with the other exchanges. So I left that out in my commentary. Thank you for mentioning it.
Don't want to paint with too broad of a brush. Point taken. Shannon, I'm going to give you the last word before we go to break.
Yeah, I mean, I think if you look at financials, I want.
Okay, back. So we got that nice breakdown. Break below that support. We use that path to try to push into those to those highs. We break, that resets us, recalibrates us. We grab those lows. So you get that continued push for us to get some sort of shift. Take out these highs, see if we can get above that 687.49. Right, light at the end of the tunnel is right here for the bulls. So they need to try to get a push back above here. Okay. Okay, we got the chat. Yep, nice bear flag right there. Support breaks. Textbook. Double bottom, absolutely. Those two bottoms. Double bottom. Off of what, right? Off of that key level. Those textbook patterns, those continuation reversal patterns off key levels with price action combinations is basically all you need. You don't need to trade all the patterns, just a few patterns. A few patterns. Okay, Bitcoin is out of here, guys. Bitcoin's at 97K. Bitcoin 97K. Bitcoin is starting to rally. IW is trying to break out of that. So IWM is the only one that's stable. IWM downward compression break. 15 minute, let's take a look at it. Couple of attempts, but IW is the only one that's relatively stable in comparison to the other three indexes. The other three fell off a cliff. Right? Fell off a cliff. The question is that tone going to remain the same for the remainder of the day? Or do we get some sort of last hour, power hour push? But the main thing is, this is setting the stage for next week. One thing we do know is we took out that weekly downside breaker. We are directional to the downside across all three of the indexes. So it's a matter of, do we close in force going into next week? A little early to make that judgment. Or do we somehow, some way, get a massive hammer on the weekly if we can get to equilibrium, or get past equilibrium somehow, some way, reclaim it and go engulfing. All right, so it's going to take us a lot of effort to go engulfing on the weekly, back the upside. We're currently engulfing to the downside. So that's the least likely, unless of an extremely bullish catalyst that hits the wire in the next 2 days. So right now, we're as bearish as can be on the weekly. Do buyers step in, buy back up, try to push it to 50% retrace of that week? Very possible, but if that 50% retrace holds up, we're trading below weekly open. That candle remains red, relatively engulfing. Worst case scenario turns into a shooter or a doji. Going into next week, there is some pressure on the buyers, right? So first week out the gate, they push everything to ATH, specifically referring to SPY. All right, SPY. What joins the party? A week later, of course, the Dow and IWM, and the Qs have yet to join the party. Now, as everything is pulling back, what's pushing to the upside? Crude is pushing, and Bitcoin is pushing. Gold already made all-time highs. Multiple times, 3 consecutive days. So now the shift is Bitcoin. Bitcoin is now ripping and running. Right? And Bitcoin is 3,000 points away. All right? 3,000 points away. That's nothing on Bitcoin. From 100K. Okay, from 100K. All right, 3,000 points is like $3 on SPY. Okay, you can equate those two things. As far as our halftime check, let's take a look at some names. If you have any chart requests, put your chart requests in the chat. Let's take a look at a few names here. We'll keep an eye on SPY on the side. We don't want to lose track of SPY. Okay, let's take a look at some names here. Take a look at some names. Absolutely. Harry. Ron Johnson. What is the R for? Let me know. Let me close this out. Something is slowing us down here. All right, so halftime check. So what's moving? What's grooving? Who are winners? Who are losers? Let's open up our chart. So the SPY is still trending to the downside. Overall trend on SPY is still bearish. So every pop you're buying off those lows is just a scalp in hopes of it turning into a reversal. Okay, so SPY selling off here. SPY below VWAP. Oh my. Apple. Apple did look promising if we can hold above that 260. Needs confirmation, but it broke below this support. All right, the support of that trend line. All right, couldn't get above it. Now Apple complete breakdown. We're starting to see Tesla. Tesla, same thing. Tesla, we broke below those lows. Tesla had a 212 trading in this channel. We were discussing Tesla as well. Yesterday we were discussing the importance of this channel. Tesla complete collapse. Tesla complete collapse to the downside. Now it's looking to recalibrate, reset, potentially push back to 425. 430 is up for grabs the closer it gets down there below VWAP. This name right here is CRWV. CRWV, potential triple bottom, quadruple bottom off this territory here. Could look interesting. Goldman Sachs is reporting earnings. This is today's watch. So the primary watch going to today was Tesla. So Tesla did have an inside day, right? Did have an inside day. Inside day just simply means harami on the day. So interestingly enough, what happens is it gaps down and continues to sell off. All right, gaps down and continues to sell off. Let's erase those drawings here. So you can see, let me take out VWAP. Prior day, SPY is starting to dump here. Indexes are dumping, including IW, which is the leader. Right, we go inside, we gap down, and we drop. So in this case, right, how would you approach this, right, with that gap down? How would you approach this? So from a price action combination standpoint, we go inside, we break down. So the best approach in this case is a BOG rejection. So if you're inside, and I'm not saying that just because it played out, that's what you're trying to look for. So if it's inside, it makes a bearish move. It's in a bearish channel, right? It's going to be very difficult to short it right off the open. You can. It might work in your favor, might not. But let it settle. Get that nice little bounce into BOG. As long as it's respecting that G50, fall back below it, and that should set you up. Okay? As far as bird's eye view is concerned, we're starting to see Google pull back slightly here. Google pulling back. After making all-time highs, Google just couldn't stop making all-time highs for after it got above the previous all-time high is 328. Right, the original all-time high before it went on an all-time high streak is right here. All right, so if you want to tie your next idea to Google it with that territory, that will be okay. SPY's starting to pull here. That'd be a nice 3 to 4% pullback on Google from all-time highs. You have that prior high. Okay. Some support previously in this territory. So Google might be setting up there for that test of those old all-time highs. Path. Previous all-time high. Tesla, we know it fell off a cliff. Broadcom fell off a cliff with that gap down. Lilly, push it to the downside. Amazon, giving back a lot of those gains. Amazon is actually in a very interesting spot here. Amazon was ripping and running last week. Different story this week. Complete push to the downside. So the more Amazon hangs out in this territory, the more I'm leaning towards it being bullish. Just need some signs of life on Amazon. So Amazon recaptured 239. Amazon recaptured 239. I'll be interested in Amazon back to upside. Okay, Amazon's on high watch. Netflix, 88, got above 90, got as high as 91, can't catch a break. Meta continues to fall off a cliff. Meta, look at that nice little flag formation there on Meta, right? Continuation pattern. Continues to collapse. Palantir down 2%. JPM down 1%. We know that's fueled by earnings. Apple down Hood, down 2%. Nvidia, down 2%. Okay. So if we take a look at our full watch list, who's the biggest winner? Biggest winner is Dow Chemicals. Billy, Chinese name. Ticker symbol ACN. ConocoPhillips. Marathon Petroleum. Toast. General Mills. CCI. XOM. STZ. Philip Morris. Deere. LMT, a lot of Dow names. Biggest losers. Rivian. Intuit. Okay. Okay. Pure Storage. Or Peloton, not Pure Storage. Peloton. Airbnb. Pure Storage. Wells Fargo. Broadcom. Teladoc. Bank of America. Fell off a cliff. Oracle. Citi. Duolingo. SE. XYZ. Intuitive Surgical, don't get those two mixed up. Okay, Intuit. Okay, that's a software name, and Intuit Surgical, two different names. Okay, so we're seeing a pretty strong sell-off there across the board. So this is our first sell-off of 2026. What we want to see now is, how do we respond? All right, how do we respond? How do we respond to the sell-off? How do the bulls respond to the selling? Do they step up immediately? Is it a delayed response? Do they buy every dip? Okay, shallow dips? Or do the healthy pullbacks get bought up? So typically, when it's a strong bull cycle, shallow dips get bought up. All the dips get bought up, even shallow dips. All right, so between shallow dips, think of that 9 EMA and 20 EMA on the daily. Okay? Think of that as a threshold. Anything below 5%. Right? Anything more than 5%, right? You can think of it as a healthy pullback. Anything above 10% correction territory. Okay, anything north of 20% bear market. All right, now this is our third time. Let's break this down real quick. All right, let's break this down real quick. Let's get technical. All right, let's get technical here. Okay, we had this zone that we were very interested in today. We already capitalized off of it. So we were in position when that pop took place. That pop led to a big drop. Second pop leads to a big drop. So you notice all the pop after this drop, all the pops were followed by a drop. And those drops led us into lower lows. So this is a textbook, okay, structure of a bear trend intraday. Right? This is textbook. We touched on it a little earlier. So now you can make that diagnosis of what kind of conditions are we in. We can see we are in a bearish environment. What is the criteria? Where are the last handful of lows up until this point? Okay, are the previous lows lower than the most recent lows? Okay, are the previous lows higher than the most recent lows? Okay, are there lower? Are the previous highs higher than the previous highs? I should say. So we're making a series of lower highs. So we got a high here, we got a lower high here, we got a lower high here, we got a low here, we got a lower low here, we got a lower low there. Now this is the first time we're kind of moving sideways. Okay, what we've been seeing is make it a little darker. We either been dropping or popping. All right, so we've been making directional moves We haven't seen back and forth in a certain territory for more than 10 minutes. Right? It takes us about 10 minutes to resolve the direction. So this time, we're starting to stall in this territory. But technically, this is, you can think of this as accumulation, just like a bear flag would be. Right? So if you're bullish, there's two ways of perceiving this. One is the trampoline, of course, trampoline setups, trampoline brick wall type of setup. Right? Trying to see if you can get it off support. And one is waiting for this to convincingly break. Those are the two areas you exist. So you need this to flip. If this flips, you get that break, you shift the structure, you make those highs, and then you give yourself a chance at a potential break. So this can really start accelerating. Right? So what's your defined risk? Maybe it gets above it, then falls back below it. Right? Those are the two areas to be bearish. The two areas to be bullish. The two areas to be bullish. The two areas to be bearish, of course, is here, treating this as resistance, or the support flip into resistance once you get a violation into a lower low. All right, so now we're at our first period of consolidation. Our first period. All right, so this means it's either you do nothing. If you're green, you're not tasked with it, making any decisions. If you're purely on observation mode, you observe, you take notes. Okay, let me put this right here. You observe and you take notes. So you can put on different hats in the same area. You can be bearish and bullish. If you're playing the range, calls off support, puts off resistance until proven otherwise. If you're playing the breakout or breakdown, you're looking for the opposite. I'm looking for the flips. Okay, so if you can understand that, you know what to look for. All right, but they've given us some clean opportunities. Now, if we zoom out a little bit, it only makes sense in hindsight. But what were we talking about yesterday? This channel. This channel has been broken. This channel has led us to how many all-time highs? 1, all-time high here. 2, all-time high here. 3, 4 all-time highs. So we made 4 all-time highs in 2026. All right, not intraday, but as a total. So 1 on the 6th, on the 7th, 2 on the 9th, 3 on the 12th. Okay. And then we made another all-time high yesterday. Met all-time highs yesterday for 4. So this is where we are. This is where we are. So if you're wondering why we're chopping around, what that translates to on the 1 is this. We are range bound. We're contained between these two key levels. You can draw a rectangle there. We're contained between these two key levels. We are contained between those two key levels. Right? All right, let's get the likes up, guys. We got 30 likes. We got 300 plus people who join us today. So let's get the likes up. Make sure to smash the like button. Make sure to subscribe. Make sure to subscribe. Join our community. Ask questions. Let's see if we can get to 2730 subs. Okay. We're 2 subs away from hitting 2730. If we adjust this slightly without stretching it too wide, we can see. There we go. So you see how that lines up. It always aligns, and it's by design, okay? Why is Baba rising? So a lot of names, the Chinese names are rising. All right, I think Jimmy was bullish on China, right? From a few days ago, and he was on the money. So far, China's on the rise, ticking off 26. All right, so the real thing is when we really have that good collection of data is when that January candle closes. So we have 4 weeks of weekly data. We'll have sector data for 4 weeks. We'll have monthly sector data as well. We'll have the MSCI data as well. We'll know how the international markets are playing out. All right, that will give us a real temperature read. All right, think of it like this. All right, every day we're getting the temperature. On the month, we get the climate. Okay, there's a difference between temperature and climate. All right, the monthly sets the climate, but day to day, the temperature can be range bound depending on the climate. Right, and the quarter is the season. So different climates, different seasons. So we can anticipate different kinds of temperature during that quarter, during that season. If that makes sense. All right. So same thing. So we don't have a read on the climate quite yet. We're just getting individual reads on the temperature day to day. So the monthly will give us the feel for the climate. And then now we know what to kind of work with. Although the temperature is fluctuating, we have a good idea of what the climate is like. All right. See if that's a legitimate push, legitimate break. We'll see. See if that breaks and pushes. If it does, great. Okay, so the number one vote in the chat is cutting losses and taking profit. So what is the hardest thing for you guys, the ones who answer the poll question? What is the hardest thing you face with cutting those losses? Is it you're afraid of when you do cut the loss, the trade goes in the intended direction? Is it you freeze? Right, which is a real thing. Right, maybe you're taking a big loss and then you just freeze. Right, fight or flight response. One of the responses is freeze. Right, or that's a response I'll add to the equation. Right, fight or flight. Third one being freeze. Right, so what is the core of why we're not cutting losses on time? Is it there's no real risk management game plan in place? And whatever it is, just know the sooner you can better frame your losses, take those losses the right way, the quicker you can arrive at your final destination. So all the things listed in the poll are the things that are holding you back. A, you need a system. You need a strategy. So all those things that I brought up, overtrading, gambling, no strategy, no system, cutting losses, taking profit, FOMO, all those things, big losses and blown accounts are on the other side of those things. All right, step one is strategy. And now that you're cutting those losses, the other part is categorizes in trade management is taking the profits. Right? For some reason, traders don't like to take the profit for some reason. Maybe they're trying to, they're playing the game of screenshots. All right, they're trading for glory. All right, trying to get the biggest return. Okay. whatever the rationale is, you have to get to the bottom of it. You have to do the self. It's almost like you're your own doctor. You have to be your own psychologist. You got to go to the core of why you're not taking profits. And if you rewind, if you just go back and think for just a second and ask yourself, 9 times out of 10, now that's a rejection zone, okay? That's a brick wall. 9 times out of 10, a trade that you took the biggest, maybe the biggest loss in, or the past couple of trades where you took the biggest losses, there was probably a little bit of green you saw. That's what you realize. But you're just on the other side of the decision. You're existing on the other side of the decision. So the way I mitigate that, if I see profit, if I see double digits, I'm taking it. Someone else can hold it, that's up to them. I like to take it. If I can get double digit gain in 30 seconds, 1 minute, 2 seconds, 2 minutes, sometimes it's that quickly, I'm taking some off the table. Right? It's always just build a muscle memory to do these actions. Build a muscle memory to do these things. You're not going to be good at taking profit. And sometimes what happens is the market plays the game of, oh, you took profits too early. Oh, the contract went for 10,000%. At some point, you have to just remove yourself from what the market is doing. You have to have the I can care less what happens. Right? You moved on already. You moved on. You took what you needed. Now you're looking for another opportunity. You can't be beholden to the opportunity, get upset that you took profit at 15% and it went for 800 and bring that suppressed feeling into your next opportunity and try to replicate what took place, because that's bad behavior. Your only job is to care while you're in the position. Once you're out of the position, you do what you needed to do. Right? You can care less about those contracts. The contracts don't love you. They don't know your name. They can care less who you are. So only care while you're in the position. Take care of it while you're in the position. Try to get something out of it. Once you close, it can go to 10,000% return. It's just all mind games. Those mind games are being played to make you compromise on your risk, to make you compromise on your rules, and that's all it is. That's all it is at the end of the day. But there's a good chance if you get into the habit of taking profit, 10% here, 15% there, 9% there, 8% there, and you just live with the rest of the results, manage your risk. Right? Worst case scenario, you'll be break even. Worst case scenario, you'll be small red. That's the worst case scenario. If you do that worst case scenario, you're not going to blow up. If you're sizing it accordingly. Unless you lose 30 trades consecutively. Right? Unless you don't have a system at all. Even without a well-refined system, at 50% win rate, 55% win rate, you can squeak by break even. Worst case scenario. But if you're trying to hit home runs, right, your risk has to be wide. You're not going to have a 5-point risk or a 5% risk, 10% risk, and 300% upside. That's not how it works. If you open yourself up for big reward, you're opening yourself up for big risk. The nature of high risk reward trades, okay, they have a low win rate. You need to understand that. Trades that are 3 to 1, above 3 to 1, 4 to 1, 5 to 1, 10 to 1, whatever you hear anywhere else. The nature of those trades, they're designed to be low win rate trades. The reason why they're low win rate is because the return covers the losses. So you need to be able to deal with winning less than 50% of the time. If you're okay with winning less than 50% of the time, and you're okay with letting your trades play out, and that's your edge, right? You can go for those large targets, but you're going to have to see it through. If you're somewhere in between, different story. Most traders are sitting between 55 to 65, maybe 70% win rate. And it fluctuates. But most of them, they have a negative RR. So they're risking 2 to make 1. Or risking 2 to make, risking 4 to make 2. Right? So the formula is, if win rate impacts your psychology, you're gonna have to trade less and go for high probability setups. Okay, 1 to 1, 1 to 1.5 type of targets. You get that instant reward. If you're looking for huge upside, you're more than likely, okay, statistically, your win rate will be significantly less. But you can't let the fact your win rate is lower discourage you from taking those trades. Because you have to let the stats play out. If you run the numbers, if your win rate is 3 to 1, you can essentially, okay, lose 2 trades. And a third trade, depending on how you manage it, you can be a little bit of green, maybe break even. If you're 4 to 1, you can lose 3 trades. If you're 5 to 1, you can lose 4 trades. All right, but most traders can't handle the back and forth. So in the beginning, you're not going to be comfortable with taking losses. Right? Having a negative win rate is going to be unsettling. You're not familiar with being wrong that frequently. And your brain can't process the fact that you're still making money, but you're losing. So it won't let you see the trade through. So most people, most traders in the beginning should be 1 to 1, 1.5 to 1, 2 to 1, 60, 65%, low end 55%, high end 70, 75% win rate in that window. Superb risk management, great reward management, reliable, dependable system. Rinse and repeat. Rinse, repeat, refine. Rinse, repeat, refine. The 3 R's. Okay, I do see your message, Jimmy. I think you will find. I think you will find, if you go to 30-minute chart, find that last swing low, which made the new high. Price has retraced back to that 61.8 fib level, indicating still continues at 700. Which was SPY's weekly low right now. Well, that's where we're sitting right now. So we're playing the game of brick wall, trampoline. We're not playing the expansion game. We're playing the game of calls off support. If you're trading, resistance puts off resistance. This is the game we're playing. Until proven otherwise, we're going to be range bound. Okay, this is the direction we're going. So the edge is playing calls off support, puts out resistance. So boom, 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 boom. So 1 bounce, 2 bounce, 3 bounce, 4 bounce, 1 rejection, 2 rejection, 3 rejection, 4 rejection. 1, 2, 3, I should say. Yeah, I'm talking. Can you hear me? Can you hear me on Google Meets? On YouTube, is the audio good? Did we lose audio? Did we lose audio? So it's officially 1 o'clock. Chop, chop, chop. Maybe this is the waiting for power hour to make that move. Can you guys hear me on Google Meets? Let me know if you guys can hear me on Google Meets. Okay, good, good. So on this, as far as where we are, midday calls out support, puts out resistance until 1 gives. Until 1 gives. If you're waiting for that break to take place, the breakdown, you know where to exist. The breakout, you know where to exist. If you're taking that rejection off resistance, which is smart, into support to see if you get that breakdown, a win-win type of scenario, that's also possible, and the opposite is also possible. But currently there is no expansion at the current moment. No expansion. As far as IW is concerned, IW is still within pre-market high, pre-market low. Broke above pre-market high a couple of times, couldn't sustain it, but has not violated pre-market low. Pre-market low ties to that 260 psychological level. Pre-market low is at that 260. 260.13. So we are bouncing off of the jaws of the gap. We are bouncing off the jaws of January 15th's gap. January 5th's gap. We keep on bouncing. Anyone else still trading? Anyone else still trading? I think most of you should be done. Okay, let's see if I continue to push. Nice little bounce there. Does that lead us to 687.49? 687.49. Do we finally break? Or do we follow protocol and reject? You guys notice on Webull, there now you can bet on the events. Anyone notice that? The events on Webull, as we continue to be in that predictive market environment. I think Robinhood has that as well. Webull has that as well. Kalshi, Polymarket. That brick wall is right here. Calls UPO. Okay. Puts UPO. Okay. So one of those levels have to give. And that's about, to give you some context, that's about, let's round that up to 20, okay? That's about a 26 cent range. 26 cent range. So for us to be UPO, we need a strong close above it. Okay? Until then, this is resistance. Till then, it's resistance. We do have this resistance from earlier. They want to break it. There's their chance. They're going to need to get that continued push momentum. Once it does flip, if it does flip, you're going to see separation. Clear close above. Clear close above. Put in the chat. This is it. All right. Do we have enough buyers off of the support to finally break? Or do we take another round trip back into 688.36? Do we take another trip all the way down there? So we're making a push back at the daily downside target. Almost at the daily downside target. Jump over to the 5. VIX is starting to push to the downside. VIX is still trading above 1750. Still trading above 1750. Okay, we're starting to push here. Uh, 687.49 is right there. 687.49. Waves are still waving to the downside on the 5. You can see very messy, right? Very messy on the 5. The number one put on the options volume is at the 687. We were able to reclaim POC. VWAP 686.68. VWAP 686.68. Last 15 minutes. Currently 4 minutes in that 5-minute candle. Starting to see buyers trying to pile in. All right, still a ways away from 687.49. They're just crushing premium. VIX is going south. Qs are inside on the 5. Dow's inside on the 5, pulling back slightly. IW pulling back slightly as well on the 5. See if we can follow through all the way back to that green box. So we go back to our brick wall trampoline scenario. That's where we are. So if we can put pressure on that support, we start to crack, slide, incoming. Chop, chop, chop. Look at that. 5 minutes of buying, 5 minutes selling, 5 minutes selling inside, 5 minutes buying, 5 minutes selling inside, 5 minute buying, 5 minute buying, 5 minutes selling inside, 5 minute buying, 5 minute buying inside. If you had to guess, what do you think we're doing on the hourly? If you had to guess, what are we doing on the hourly? Inside. Intraday hourly candle. Inside the jaws of that massive sell block. So a lot of buyers do step in anytime we get into the jaws of January 5th's gap. And if you're in a position, what this is doing is, this is just eating the premium. So the closer it gets to 4 o'clock, okay, just being in the position, you just lose value. Even in this last little juncture here, look at this. All that back and forth. Main thing is just to stay patient. And most of you are done. Now you're not missing much, right? They gave us the opportunity during the first 2 hours. Really making it difficult in this area if you're looking for expansions. They're trying to prove this UPO area otherwise. See if they can get it done. Buyers, that is. Last interaction at the very top. We did get a push back to the downside. See what takes place here. The very top of that UPO for those puts. We went 3 up on the 5 on the Dow. Look at that reaction. See how far this sends us. So can this reaction send us all the way into here? That's the $1 million question. So again, if you're a bull, you're waiting for it to get over the hump, or buy at support. Okay. I will run the stream until 2 o'clock. 1:30, 2 o'clock, and we'll wrap it up. Again, guys, make sure to like the video. Make sure to subscribe. CV that continued push. Dow starting to slide. IW starting to slide. Jump over to the 15 here. Double inside on the Qs. A lot of traffic here. A lot of back and forth consolidation. Okay, there we go. So until proven otherwise. So if you're a bear, you're taking the puts up there. Okay, until proven otherwise. Now you're seeing buyers step in again. Look at that wick. Very short-lived. They're stepping in again. Is it enough? Is it enough? Is it enough? Is a grab of these lows enough to fuel us for takeoff? We are putting pressure on this resistance from this morning. Formation, first touch, second touch, third touch, fourth touch. Okay, we had a reaction here. Again, what's the next reaction? All right. So we're seeing buyers are stepping in off of this liquidity area here. So if we dip back into here and they don't step in, that's going to open the door for that slide. All right. They step in, they step in, they step in. So if we get back here, they don't step in again. That opens the door for that slide. But not enough buyers are stepping in to push it over, to take it over the top. So you can see the story playing out. You can see the narrative playing out between the buyers and sellers. Now that 5 minute, we have multiple wicks on that 5 minute. All right, somewhat of a fork, all right, more than a tweezer top or a thork. All right, if we get one more wick on the next 5 minute candle, we'll get a fork. All right, without that, it would be a tweezer bottom. Not off of support, but just kind of at the top of that push higher. So do we push all the way back to 680, 638 or break out? Do we drop or break out? That's the $1 million question. No horse in the race, so there's nothing. There. Do we drop or break out? Put in the chat. Okay, you can see every time on the 5, right here, wick, right, multiple wicks there. If we can get that break close above 687.49. I'm starting to see the Qs push. Dow starting to push. Dow's IW starting to push. IW starting to push. Sideways is a killer. I'll see you tomorrow, Artem. Absolutely. Watching paint dry. Yeah, paint dry, grass grow. VIX is holding that 1760-ish. Someone move. Okay, we got breakout. Vote in the chat for breakout. If you are playing the breakout, what's your level? Put your level in the chat. If you're playing that breakout, put your level in the chat. If you're playing the breakdown, what are you looking to see? What the bears need to do is just keep it below 687.49 and try to put pressure on that support. Put pressure on the support here. At least get it back to this area and put pressure on all those buyers who stepped in here to buy back up. A lot of back and forth here. See if you can push pressure on that support. Make that support fold and get a 3 down on this candle here. If we go back to our UPO chart, it's going to require you to be patient. Okay. Look at this. Right there. On the verge. On the verge. On the verge of flipping this put zone. The clock is ticking, but still a put zone. See if they can crack this support. And we're about to go to a new shift. So all this entire shift here, if you recall, guys, we were moving about $1 and some change during the first hour of the day. Now we're moving half of that, or close to half of that. We're moving about 62 cents per 5-minute candle. $0.62 per 5-minute candle. Okay, there we go. See that continue to drop. So now remember, the bear's job is to bring price to this liquidity zone and put pressure on the bulls to buy back up. If they don't, this thing can start to drop. All we need in that case are the indexes to continue to push higher, push lower, and the VIX to wake up. Right, the VIX has been in a 1, 2, 3, 4, 5, a little of a deep sleep here to the downside. If it starts to wake up, that's going to favor the bears. All right, so see what they do with it. See what they can do with it. Okay, they're using it as support. Using that support. Make sure to like the video, guys. Make sure to subscribe. We'll look to wrap up the stream here after this. Close of the shift. We'll look to wrap it up. We're just seeing paint dry, grass grow. So all the bulls need to do is use this. This is their window of opportunity. Use this, don't lose this. Use this, don't lose this. Okay, they got an engulfer there. Okay. Starting to put pressure on that UPO now. They officially got to close above it. See if it can hold. Nice engulf under 5. Do we go back down? Wow. They don't want that thing to go shooter and get back below that open. That open is 687.18. Okay, VIX is headed back towards the downside. The Q is still chopping around. The Dow is starting to sort its way, find its way. IW trading above that hourly breaker. And we're about 2 minutes away, minute away from the conclusion of the shift here. We can reclaim 667.49 with strength. VIX breaks below 1757, 1760. Decisively, Qs wake up. Dow wakes up. We can start to see SPY wake up as well. VWAP is at 688.53. VWAP is at 688.53. Okay, now we are above third shift highs. We're above third shift highs. Again, guys, make sure to like the video. Make sure to subscribe. VIX falling off a cliff. That's favorable. Q's pumping. Dow pumping. See if that can turn into a shift high grab at that 1:30 hour. So you don't want this to get back below 687.49. You want that more positive momentum the bulls have been building to hold up. And this just to be a little bit of a pullback. A little bit of a pullback. But we did get above that UPO. The bulls have declared victory over that UPO. If it gets retested, turns into a test area, testing ground. A 5-minute wave is looking like it wants to flip. So if you're long, you want this area to hold up. You don't want to close back below here. You don't want to close back below there. And you want that support to hold up. Q's falling off a cliff. The Q's have potential to go 3 down to 15. SPY, the 15-minute candle, starting to show some weakness as well. There might be a nice little trap there. Okay, we break above shift highs. We grab those highs. Let me take this off real quick. You can see it a little better. We grab those highs and we push to the downside. Manipulation at its finest. Manipulation at its finest. If the put zone gets given up, then we start pushing back down. And again, this area becomes very sensitive. All right, very sensitive. Wow, what a trap. Wow. What a breakdown. So question is, do they want to now drop it all the way here and grab these lows? We grab those highs. Do they want to grab these lows now? Okay, that's the question. So does this want to get that? Does this want to drop into 686.38? We'll see. So now the bears can't afford to give this up. Right? If no bulls step up after stepping up here, that opens up the door for that slide. That opens up the door for that slide. The Qs went 3 down. Surprised that if we no response there. So bulls need to keep price below 686.87 in pursuit of this area in the bull territory. Wow, that's what you call a trap. Probably want to target that 686.38. All the bulls need to do is keep price below 686.87. Keep it below that. If they can do that, they did their job on that last 5-minute drop. If they can trigger 686.61, that opens the door for us to continue to drop. The waves officially flip back the downside. VIX shot out of a cannon. VIX shot out of a cannon. Wow. You're going to take that breakdown. You're going to take that breakdown. That was a beauty. Took some time to unfold. Trap. Nasty trap. On that note, we'll look to wrap it up here. Any questions, guys? Let me know. And now look where we are. So we broke above it. So we got that break. Right. Retest, no retest, and just dropped. Fell off a cliff. Right, and broke this support, trend line support. Now it's kind of in the middle of nowhere. So what happens is, guys, this flips back. This flips back. All right, this flips back, and they have a lot of trap positions, right? So these highs are trapped. That's the end of fourth shift to fifth shift handoff. There you go. All right, they're playing a vicious game. Vicious, unforgiving game. Even if you do go long there, if you manage risk, you can make out. Again, like we always say, the ones who get punished are the ones who don't manage that risk. And we're now in that call zone. Call UPO, same thing applies. My lottos are losing if SPY maintains to crack back above 687.70. We'll buy 690 calls for tomorrow. They're lottos. I mean, lottos. You can take lottos. Risk is a little wider. No issues there. My primary thing is you don't want to hedge your whole system on lottos, right? So in this case, grab of these lows will be the interesting setup. Oh, we were looking at Baba earlier. That was a pump fake of the day. Pump fake of the day. Any questions, guys? Any questions? If you found value from the stream, make sure to like, make sure to subscribe. If you're looking to level up your trading, go to smartactiontrain.com, smartactiontrain.com. That's our official site. Go to the community tab. There's multiple ways to join the community. Right, you can get the free access Discord. That's always available to everyone. You have access to free trading community there. Let's build a chat there. 24/7 stock market newsfeed, Catalyst event calendar updated for you every week. Free trading journal. Of course, live trading through YouTube. Educational tools, trading resources, daily giveaway. The daily giveaway is based on the amount of likes we get. If you're looking to level up your trading, you can go with our trial plan. If you're on the fence, right? If you're on the fence, you can go with our trial plan, give it a shot. Use the code TRIAL30. There's a few spots left there. You have access to live trading with screen share, trade ideas, no real ad-free, delay-free stream. Also our pre-market prep, along with our game plan, along with our supportive community. You also have access to a 5.5 hour getting started day trading options course. All right, that's available to you in the Discord. That's available to you in the Discord. If you want to level up and lock in for the year, commit to the process right away, right out the gate, this is the best option. Coaching call, boot camp ticket for the next boot camp, on 12-month access to the community. So everyone on YouTube should be in one of these tiers, right? You should transition into each tier over time. All right, if you're in the free tier, look to level up here. If you're in the monthly, look to lock in for the year. All right, so again, those are the ways to engage our community. If you're looking to have to update the poster for the boot camp, there's one more boot camp coming up January 31st. It's going to be our last Getting Started Day Trading boot camp. The ones who did take the boot camp on Saturday, all right, everything will be uploaded this weekend. I tried to download the video, cut some pieces out, and add sections to it, and it turned out to be 50 gigs. It turned out to be 50 gigs, and so I'm just going to upload the raw version of the video, right? It's a massive, massive video, HD quality. You'll have access to it, everyone who took it. If anyone else wants to sign up for that new boot camp, our new cohort, January 31st, got to update the poster. Make sure to sign up. If you want to take advantage of this Getting Started Day Trading self-paced course, take advantage of that. If you're looking to book a coaching call, you need that one-on-one time. That's also available. Grab our ebook, and now, of course, our merch. If you want to support the channel, get the merch. Look good, feel good, trade good. So the mug, the Power Up mug, the SAT Mantra tees, more tees will be coming up, and the Make Trading Great Again hat. All right, the beanie along with the dad hat. All right, so again, those are the ways to engage, to support the channel. YouTube, you can support on YouTube as well. If you're a first-time viewer, continue to tune in right there. Right, I'm trying to show you how to navigate the markets, how to draw these areas, understand, break it down in a digestible manner. If you're a first-time viewer, continue to tune in. Ones who've been tuning in for 3 to 5 episodes, that's usually when you take the next step. Let's highlight some of our team members, so it's not only you. You get access to all these resources, guys. All these resources. The beanie, yeah, the beanie's awesome. Right, so make trading great again. If you see that anywhere else, it's a copy of what we got. All right, make trading great again. That's the hat, the dad hat, and of course that's for everyone, but it's a rough and rugged, high quality hat. All right, that's my job, is to give you the tools, resources, so we can make trading serious endeavor once again. I know that a lot of the space has been tainted with trying to achieve unexpected results. Yeah, the beanie, also good for everyone up north. All right, so this is the beanie that you want to have. All right, so again, multiple ways to support the community, but most of all, you want to be in the free tier. I'm looking to phase the free tier out. Take advantage, and I'm looking to potentially add another tier, a light tier to this, and do a price increase. All right, the amount of value, the amount of time that we spend together, the amount of effort I put into all this, right, you're not going to be shortchanged. No one's going to match the level of effort, match the level of work, match the level of consistency, right, on both the trade front along with the providing value front. So that's what we're dedicated to doing. And our members, I'm happy to see all our members continue to find their way. Let's highlight some of them. All right, constantly posting technicals. Most of the work gets done between 9:30 and 11:30. So 9:30, 11:30. All right, we can see 10%, 11%, 13%. done for the day, minus 2.95% on the day. Tremendous job, right? So again, we got to get comfortable with those small losses, break evens, and the greens will start taking care of themselves. Here, okay, 2 wins, 1 loss. Position portfolio is up. We can see out calls 27%. Good portfolio once again. Okay, up 0.43. That's a huge, huge number, guys. Okay. What else? It's 3 for 4. Good. So it's a handful of traders, right? Dedicated traders, all trading their system. I'm not going to tell you to buy or sell anything. All right? There's no, enter here, below there, enter, do this, do that, do this. You have the educational resources. You put the pieces together because I'm trying to train you to learn. Now just bounce off that trampoline. Okay, 10% there, 4% there, 6% ROI. Okay, good. 30% there, 21% there. Good. 42% there. Good. -9, love to see it. -14, okay. 33% there. 72% there. Game plan laid out. Firefly Nerd, okay. Right, so that's the kind of community you're going to be part of. Highly focused, highly dedicated, show up every day. No fluff, only the good stuff, all right? The process. The stuff that the trading space wants to downplay. They want to under-index. They want to over-index lifestyle, but they want to under-index the effort, the work that goes into it. So we do the opposite. Okay, we do the opposite. All right? So again, if you want to join, links pinned in the description. Trial, there's a few spots left on the trial, 8 or 9 spots left. Take advantage. If you have any questions, put in the chat. Here you go. Another bounce. All right? Can you take the calls here? Sure. For that break until you push higher. You get stopped out. But ideally, in this case, you're getting the flip to trying to see if you get that continued push. Had to go back lower and reset. This is where you want to be. Grab those lows, come at that key level. There you go. All right. Any questions on YouTube? Hi, I'm interested by swing and long-term strategies. Do you offer those in Discord? Yes, there is swing long-term strategies as well. We do have those discussions every day. If I do have any long-term ideas, I do post them as well. Okay, I do post them as well. Up 40%. 50th bottom bounce. Beautiful job. All right, so our traders are trained, okay, to strike, aka strikers, in certain areas to manage risk precisely when they're wrong and to compensate themselves when they're right. Okay, that's going to be the marker of you if you've been trading with our team. Excellent risk managers. Okay, that's going to be the marker. So very rarely, from time to time, do you see it? Absolutely. Very rarely are you going to see someone who's been on our team for a long time. Things can happen, guys. Things can happen. I'm not discounting that, right? Sometimes you can just go on tilt and things can happen. But most of the time, we collectively, okay, try to keep everything in check. Collectively. Again, here, rejection there. Now the moves are cleaner. Here, there was a lot of indecision. This was just, they were just luring the bulls, and then dropped. So the ones who got wiped out here, even if you're bullish, you took that break. If you have risk management in place, it's just another stop out. If you don't, you sell somewhere here, and then as soon as you sell, you see a bounce, and now your brain is broken. And now you try to chase again here, and then it drops. And then you want to apply risk there, and then you get stopped out. Right? So The market literally wants to break your brain. Okay, it wants to break your brain. So those ideas are available under the swing trade tab, trade ideas. Okay. I primarily, the setups that I teach are available. You can apply them to swing trading. All right. So you can see all the different ideas posted from time to time. Okay. You can see. But before I get the swing trades going, let's at least, I want to wait a month. I want to see what sectors are moving. Give it a month. We're seeing some sectors move, a little bit of back and forth. We'll give it about a month or so. Let's settle in. It's still January. It's still 2026. Let's settle in. We don't want to jump the gun out the gate, guns blazing. We want to ease our way into the year. Same way we ease our way into the week. All right, January is like a Monday. All right, get some feelers out there. See how things are going. See what the market is doing. Okay, it's at all-time highs. Pull them back slightly, XYZ. All right, if you're still holding those runners, Jason, congratulations on exercising that patience and waiting. All right, those should be up. Nice run, 55%. There you go. On my end, I could have done a better job being a little more patient today. I did find myself a little impatient. A lot of risk management. Okay. Stopped out, took it for 17 there. And this was the trade that we took on YouTube, walking through it. Walking along the setups. Walking through the setups. In this area, retraced, reject, got stopped out for the puts. Was looking to entertain the push back the upside. That happens from time to time, right? Sometimes from time to time, I do know that I can get overly technical. All right, that's what comes down. That's what happens sometimes when you have the technical ability. You become overly technical, right? And you trick yourself out of a situation. All right, there's such a thing as being overly XYZ. Right? Sometimes you got to just take it for face value. Okay, so that's that case, but regardless, manage that risk. So I would say our risk management today has been better. We did catch this pop the upside for 30+%, and then stopped out there. Okay. All right. Any questions? That was a beautiful break, JB. There we go. Now we have fuel. Where's the best entry? Who has the best seat? First class seat. Okay. On this flight. On this flight to 689.19, who has the first class seat? First class seat. Second class seat, rejection, coming to that buy block. All right. Right here's that retest is the last. Because this person's entry is way different than this trader's entry. It's way different than the person buying calls entry here. So the person buying calls here is on the verge of being rewarded, but has to manage risk accordingly. The person who bought calls here, right, risk management is out of the picture. What I mean by that is already took a majority off probably, and now is just runner management, babysitting. So two different scenarios. If they trap this thing one more time and dump one more time, that'd be brutal. All right. See what's setting up for a retest or a complete dump, trap again. We'll be interested in playing vicious games, guys. With the playing vicious games, so do exercise caution after 11 o'clock. After 12 o'clock, those zeros become dangerous. Those zero DTEs. Okay. We'll wrap it up here. And guys, if you do upgrade to the yearly, make sure to cancel your Gumroad subscription. All right, make sure to cancel your Gumroad subscription. All right, I cannot cancel on your behalf. Okay, so make sure to cancel your subscription if you do upgrade to the yearly. All right. Thank you for all your hard work. Absolutely. Okay, we're wrapped this up at 2 o'clock. Hopefully you guys found value. Smash the like button. And then we'll be back tomorrow. Same time. 9:30 a.m. And things should get interesting. I wouldn't be surprised if we try to make a run up. Okay, let's just go take a look real quick. All right, so we can see this initial push start to fade. And we got a nice little push, nice little pullback. And then we continue to go. So just take a picture or just study both of these. This one and this one. You'll start to see the distinct differences. This one, where is it coming from? This one, where is it coming from? Okay. This one, what's happening before it. This one, what's happening before it. Even if this one didn't work, you still want to see the difference because it can only happen so many ways. You're not going to be able to catch all of them. Say if you took the loss here. Say if you went long off that retest, trying to front run, you get stopped out. So you after taking a break. So you do the same thing here. Right. That's that 2-to-1 would mean. 2-to-1 would mean, let's say, what is the risk here? 25, let's say 50, okay, roughly. All right, so let's apply 2-to-1 to both of these. Okay, you take this break, stopped out, fine. You take it again, you hit TP. So this means if you trade it accordingly, you're up 1R. Because you didn't take the loss all the way here. You just took it into here. Even though it's 50%, you're 2-to-1, you're still up 1R. If we take into account management, maybe a little bit of slippage, entry, worst case scenario, break even. Break even to small red. All right, but what happens is some traders will take a trade here, get stopped out. Same exact setup presents an opportunity, and they won't take it. Maybe they're afraid. But if it's valid, you're going to have to re-engage. Okay, and if you get stopped out again, and it was valid, okay, it just didn't work out at that particular time. But don't all of a sudden expand your risk. You have to move away from here and go to the next opportunity. So what's going to happen is if you get stopped out here now, you're going to be afraid to take it here. And what happens is the one you're afraid to take is the one that takes off. Haven't you noticed that? The one you're afraid to take happens to be the one that takes off. But the one you took happens to be the one you got stopped out on. So what that means, if you put the pieces together, is you're 1 or 2 stop outs away from being very right. You're a couple of losses away from being very right. So you got to keep digging. Hi, I'm interested in swing and long-term strategies. Do you offer that in the Discord? Yes, I do post that time to time. Swing trades, but we're primarily focused on day trading. I do provide my take on swing trades, but we do have that, let's say 3 to 5 times a month. 3 to 5 swing trades a month. On the low end, 3. On the high end, 5. But all those resources are there. So I did see your question earlier. Discipline Wall Street. Any other questions? And any bulls take this to the upside? If you did, great job on being patient. If you didn't, continue to do the price study. All right, we'll wrap it up here. Thank you for tuning in. This wraps up today's show. Again, make sure to like the video on your way out. Make sure to subscribe if you have found value. Turn your notifications on. Share with someone you may know. Join the community. We'll see you guys tomorrow. Same time, same place, 9:30 a.m. for another episode. Tomorrow, as far as tomorrow is concerned, what do we have on the calendar? We have unemployment claims. Unemployment claims, and then we wrap up the week. All right? Any questions? If not, thank you for tuning in. Stay safe. All the links are pinned in the chat. And God bless each one of you.
Tired of wasting at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the Spy Strikers Trading Mentorship Discord community created. He trader for 1 hour and make strides towards consistent results. Join the Spy Strikers community and get daily live trading, clear pre-market game key levels and high probability buy and sell zones, over 4 hours of delay-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This no service. It's a community focused on profits, all the resources, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated trading with confidence. Become a Spy Striker today, and take your trading to the level.
switch, I think you would have a pretty big fallout. But you have some, look, you have Goolsby, you have a few others that, and